All right. Good morning and welcome back to docket 250712, application of Hazardville Water Company to amend its rate schedules. My name is Tom Wheel. I'm the interim chairman here at the Public Utilities Regulatory Authority. I'm joined today by my colleagues, Vice Chairman David Arconti and Interim Commissioner Jan Beecher. Commissioner Michael Karen and Interim Commissioner Holly Cheeseman will be joining us a little later this morning. We're here today for a late file hearing in this case, and we are working from the agenda that was posted on December 17th. We took appearances from parties and interveners at the outset of the evidentiary hearing, so we're going to start today with administrative matters. I did also want to open the floor for any public comments before we start the hearing, but we'll start with administrative matters.
Good morning, Chairman Wheel. For the record, David Bogan, along with Colleen Olson on behalf of Hazardville Water Company. I did alert the case coordinator of the need to stop today at 3 o'clock if the chair would permit. Mr. Sherwood has to deal with a personal issue.
Absolutely. That's no problem. So we will plan to stop today at 3 and we'll presumably resume on Monday, assuming we won't get through everything by 3 o'clock today.
Thank you, sir. Nothing further.
Any other administrative matters? I did have hearing none. I did have a quick note about the potential, I'm not sure whether this is going to be relevant or not, but the potential for any requests for supplements that might come up, which has happened in the past at late file hearings. So in the event the company's asked to supplement any late file exhibit or otherwise offer any evidence into the record at some point in the future, obviously according to the schedule, the evidentiary record in this case closes on December 22nd, which is also the last day of the late file hearing. And as I'm sure all attorneys know, the UAPA requires that every party be afforded the opportunity to conduct cross-examination on all evidence. That's General Statutes 4177C. So I just wanted to highlight that any exhibits that might be offered after the close of evidence or after all parties have had the opportunity to cross, the authority is going to have to afford those the appropriate weight. But I did want to just flag that if circumstances arise that give parties a right to cross-examine, but a party is willing to waive that right, it would be helpful to the authority if that were addressed in briefs, like whether there's an objection to the consideration of evidence that comes in after a hearing or whether there's a willingness to waive it. So again, no idea whether any of that's going to be relevant, depends on sort of what happens at the hearing, but I wanted to kind of flag that at the beginning. I don't think I see any members of the public in the room, but does anyone have any public comment? I mean, we're all members of the public, I suppose. But... Okay, hearing none, we can start the evidentiary hearing. And Attorney Bogan, these are the same two witnesses that were introduced on December 2nd, correct?
That is correct. With us today is Robert Sherwood and Jennifer Wright. They have previously been sworn.
Okay. Thank you. So reminding the witnesses that you remain under oath, Attorney Bogan, the witnesses, if they could adopt the late filed exhibits.
Thank you. Starting with you, Mr. Sherwood, did you cause to be prepared or oversee the preparation or prepare yourself the late filed exhibits filed on behalf of the company in this proceeding?
Yes.
Do you have any changes, corrections, additions to make to that material?
No.
Is the information true and accurate to the best of your knowledge and belief?
Yes.
And do you adopt that as your testimony in this proceeding?
Yes.
Ms. Wright, similarly, did you prepare, cause to be prepared, oversee the preparation of the late filed exhibits submitted on behalf of the company in this proceeding?
Yes.
Do you have any changes, corrections, additions to make to that material?
No.
Is it true and accurate to the best of your knowledge and belief?
Yes.
And do you adopt that information as your testimony in this proceeding?
Yes.
Thank you. The witnesses are available for cross-examination.
Thank you. And we'll start with authority staff. Go right ahead, Mr. Bakari.
Good morning, Chairman. Good morning, Commissioners. Good morning, panel. Sulaiman Bakari for Pura staff. Please turn to your response to late file number 2. Also, you can look at late file number 1, Schedule C 3-3.8.1. If you did, let me know.
Okay.
Now the company explain why the estimated legal expenses increased from 84,000 requested in the original application to 150,000 listed in LFI 1.
That would be because we found that attorney's fees are higher than what we originally anticipated. So we adjusted for that.
For each of the estimated rate case expenses, could you clarify if the company has any information on the actual cost incurred to date?
Yes, I have, well, the legal fees to date were about 77,000 billed and then anticipated another 70,000, 75,000 for work in process plus future expenses that haven't been accounted for. So I have invoices and I have documentation written for the estimate from our attorney.
Before I ask you to supplement that LFI 1, besides the legal fee, does the company have as the actual cost to date for each of the other items?
Not for everything. We have for some, the mail notices, overtime, accounting, we have some documentation for what's been billed and a contract with an amount. The rest of them, we don't have specifics, but the major ones we do.
Okay, you said overtime. By overtime, you're talking about the company's internal payroll.
Yes.
Chairman Wilk, I will like the company to supplement LFI number 2 for the company to provide or supporting exhibit for rate case expenses incurred to date.
Okay. I guess my spidey sense was correct at the expectation of requests for supplements. All right, that'll be a supplement to late file 2 to provide support for rate case expenses incurred to date, you said, Mr. Bakari?
Yes, Chairman.
Okay. Can I ask a follow-up question maybe to the panel? I thought I heard testimony that part of what's already in the record in this case is comprised of expected future legal expense. Is that correct?
Yes,
Okay.
unbilled legal expenses related to the rate case, yes.
Okay, so maybe could that supplement also just reflect the basis for those expectations, like support for the calculation
Yeah.
of that expected amount? Thank you.
And if I may, Chairman Wheel, in all likelihood, at least the legal portion would be subject to a motion for protective order.
Sure. Yep. And I'll just say for the record, the company or any other, I suppose the company is the only party with witnesses today, but so the company is always free to file a motion for protective order as to any exhibit that may qualify for protective treatment.
Turn to your response to LFI number 3, please. For the sales and use tax expenses, could you clarify if any of those sales tax and use tax involve projects that are subsequently reclassified into either tangible or intangible plants?
I don't understand the question.
My question is, the sales and use tax expense for which the company is requesting to recover I want you to clarify if any of those sales tax incurred involve projects that were subsequently reclassified as either tangible or intangible plants.
I don't believe so, but there's a lot of data on there. It would take a lot to find out that information where it was if it would be reclassified.
If you go to the exhibit supporting that LFE response, I'm going to ask the company to provide for the last four quarter reflected in the response, the sales and use tax return for quarter ended December 31st, 2021. That's in Excel row 4550. March 31st, 2022. That's in Excel row 4695.
What was it? I'm sorry, March 31st, 2022?
2022. For quarter ended June 30th, 2022, the tax return was reflected in Excel row 4857. And for September 30th, 2022, as reflected in Excel row 4870.
That's another supplement request.
Yes, Jim.
Okay, and I have that just so to make sure I have it.
This is
The reference is late file 3 and the
three exhibits.
okay, and the request is provide sales and use tax returns to support Excel rows 4550, 4695, 4857, and 4870.
Yes, Jim.
Okay, thank you.
My next question has to do with an issue we thought we resolve at the regular hearing. It has to do with the 2007 water supply plan defi expense. Please turn to your LFE exhibit. Actually, turn to the response number 4, LFE number 4. Let me know where you are there.
All set.
Okay. Is the company testimony or is the company suggesting that the 14,311 expense associated with the 2007 water supply plan was not recovered in docket 090610?
Correct.
Okay. If you go to page 2 of your lead file number 4,
That's page 2 of late file 4, exhibit A.
yes. The company seems to be suggesting that the total requested for regulatory commission expense was 72,230 in that prior docket. Is that correct?
It's what's on the exhibit, yes.
Okay. That exhibit appear to show that the amortization expense of 72,230 was for the test year, not for the pro forma year. Because the pro forma column does not appear on that exhibit.
Can you please repeat that?
The exhibit does not include the pro forma column. We are only showing the test year column.
I believe that was fixed in the,
Does the company have the attachment A to the notice of admitted evidence that the authority filed on November 25th?
yes, we have Exhibit A open.
Okay. If you look at the last column, that column is the pro forma year that shows the pro forma amortization expense related to regulatory commission expenses was 75,843.
I don't either. Do you know? Are you referring to LFE 4 Exhibit A?
No, I'm referring to attachment A to the notice of admitted evidence that the authority issued on November 25th.
Well, I have to look that up.
Mr. Chairman, Ms. Wright believes she has the information that Mr. Bakari seeks, but it's going to take a little due diligence. So if we could pass that for the time being, someone's going to look for it.
Sure, does that work for you, Mr. Bakari?
I think I found it.
Oh, we may have found it.
Yeah, it is. If it's helpful, it's filed on the docket, like on the last page of the docket filing under notice. Notice of admitted evidence, it's November 25th, 2025.
I just can't access my emails right now.
Okay. But sure, we can. Mr.
Okay.
Bakari, oh,
I'm now
okay.
75843. I have that here. Yes. Uh, See that? See.
what that is, if it's helpful, and maybe just for the record, is a copy of late file exhibit 40 from docket 090610.
I do have parts of it. I just don't see the. What is on that, I mean, wait, there should be more to this. I guess we'll have to look for it. Yes. Yes.
Oh, okay. Also, if you look at the total O&M expense reported on attachment B, the amount is 2,045,643.
I don't have attachment B.
Okay.
So I have to find it.
Subject to check, the total O&M reported in attachment B was 2,045,643. That same amount was identified in the authority decision for docket 090610 on page 9 for the calculation of cash working capital. And that amount included the, prior to pro forma adjustment, included the 75,843, which is the total amortization for the regulatory expense item from that rate case. To me, that 75,000 appeared to include $2,862 for the amortization of the 2007 water supply plan update cost.
Okay.
Um,
Morning.
Morning.
Just perhaps to help work through this, ma'am, Russ Bowman, staff attorney with the authority. Are you looking at the A attachment? It sounded like you didn't have B, but do you have the A attachment to the notice of admitted evidence in front of you?
If this is A, then I do have it. I don't know if I only have papers. I don't have,
It would say Exhibit G22 from the prior rate case.
yes, that's what I have in front of me.
Okay, and on the bottom right-hand corner, there's a line item that says supply plan update, and then in parentheses, well, the line is on the left, $14,311 over 5 years.
Yes,
Okay, and then following that all the way to the right, $2,862.
yes,
So you would agree that the 2,862 is part of the 75,843 total?
yes,
So would that mean that that 2,862 represents the amortization of the 14,311 and included in the calculation from the last rate case?
it would appear that way.
Okay, thank you.
It wasn't, there's nothing showing
That's an
there.
exhibit. It's missing this.
It's cutting it off.
So that's not the correct paper. This is the correct paper. Sure, okay, so
Okay.
Turn to your response to lead file number 6. Also, you can look at lead file number 1, schedule C 3.6. 3.6. If you look at the Excel 17, can the company clarify why the company is making an adjustment to remove the 12,500 payment to New England Water Management Services from the pro forma period?
We no longer have an association with New England Water Management Services. So there will be no more expenses related to that for what's being going forward. Yes.
The company, New England Water Management Services, that's a DBA for Mr. Flagg, is that correct?
Correct.
Turn to your lead file number 8 and response to RIU 90, attachment J.
Okay.
If you go on page 6 and 7 to attachment J, the service description appeared to suggest that the billings were for both accounting and legal were for both Hazardville as well as Jewish City Water Company.
I'm sorry, can you repeat that?
If you go to page 4 and 6, there are
What was the second document you said to open?
that is RIU 90, attachment J.
Okay.
If you look at
What
the
page?
page 4 and 6,
Okay. Okay.
the service description appeared to indicate those legal services as well as accounting services were provided for both Hazardville and Jewish City. Is that correct?
Yes.
Could you explain why the company is not allocating those expenses between the two companies?
I don't know the reason why. We can't seem to find where it was, but it's old and we don't see anything allocated to Jewett. Don't know why it wasn't, but we adjusted that in the workbook to reduce it.
You adjusted for one of the expenditure, but not for the one that's supported by RIU 90, attachment J. If you look at your response, to lead file 8.
Right, it says that the Jewett portion is 744,975. And we reduced the workbook, the deferred expense by that amount in the LFE 1 filing. Are you not seeing that?
I have your LFE 1 file in front of me. If you go to your exhibit 3.1, 3.8.1. For the 2018 tax code, the company is still reporting 12,965. That amount was not reduced. You reduced the Federal Repair Tax Act cost for amount allocated, but not the 2008 tax code expenses.
I believe the 2018 tax cuts had their own, I have to research this because one of them has their own separate expense on Jewett City side.
If you go back to attachment J one more time and go to page 5 and page 5 and page 6. The professionals that you hire to represent you, both legal and accounting, bill services described here. Could you explain why those professionals will bill for the same proceeding, bill Hazardville and Jewish water separately?
I don't know the
For-
answer.
For the same hours of services?
I don't know the answer to that. I have no knowledge of this transaction.
Turn to your response to lead file number 36. Let me know when you're there.
Mr. Bakari, we're looking at the narrative response to LFE 36.
Yes, Chair.
Okay, thank you. Okay.
The 83,334 purchase order. Could you confirm if that amount was included in the test year as an operating expense?
I don't think those are from them. Yes, those are from the test year, 2024.
Just to confirm, if you go to late file 1, schedule C 3.2. And you look at Excel 26. Subject to check, that's source of supply cost 98,993. Subject to check, that included the water supply cost. Is that correct?
Correct, that's Hazardville.
Okay. If you remain on the same exhibit, for some reason, the company is escalating the supply cost by 3.2%. Can you explain why the company is escalating water supply costs for inflation?
That didn't have a specific adjustment amount. We didn't use anything that didn't have a specific rationale behind it was inflation adjustment. We didn't make any other adjustments.
But the water you are purchasing is from Connecticut Water, and Connecticut Water has not been here for any adjustment to its rate schedule. Why would you escalate the supply cost for inflation if the commercial rate for Connecticut Water remain the same?
We took it out of another spot. It would have come out of. I'll have to look at the account. There may be other things in there besides the purchased water.
Yes, but the total amount has been escalated by 3.2%. I understand there's additional 15,000 unrelated to the purchased water from Connecticut Water. But my question is, why should that amount be escalated by 3.2% if their commercial rate does not change?
Apparently, there was an error on this. We didn't know that. We didn't understand all that information at the time.
Go to the attachment to the same late file response, please. Also, you might want to reference late file 1, Schedule C 1.2, and Schedule C 1.1.
1.2, see. And okay.
Okay. Can you explain why the pro forma adjustment of 826, 330 in Schedule C 1.2 is different from the 861, 933 pro forma adjustment in Schedule C 1.1? Subject to check, the difference between those pro forma adjustments about 35,603.
Which line on there are you referring to? On 1.2 and 1.1?
1 second. One point one, that would be Excel 14, which is line 1. You have as pro forma adjustment 861, 933. On Schedule C 1.2, Excel 26. You have as pro forma adjustment total 826, 330.
We're gonna need a read-in or something for that.
Sure, we can do a read-in. And just for efficiency, I'm going to reset the read-in alphabet. So that'll be read-in A. And can you give me a prompt for that, Mr. Bakari?
The company should explain the difference between the pro forma adjustment in C 1.1 and C 1.2. There's about 35,606, 603 difference between those pro forma adjustment in those two schedules.
Okay, that'll be read-in. A.
You remain in Schedule C 1.2. Can you clarify why the company is removing weaker revenue from weaker RAM and rail customer from the total test year revenue?
Rye Hill was removed because they're not our rates. And the WICA and RAM would be adjusted with the rate case expenses, so we took those out. With the,
You,
it'll be reset, WICA will be reset.
right, for Rye Hill, the company is getting those revenues, is that correct?
We collect and we pay Connecticut Water,
I mean,
so, yeah.
I believe we discussed the purchase cost from Connecticut Water earlier, the 83,344.
yes, and we removed that from our expenses.
No, you included in your expenses in C 3.2, and then you escalated it by another 3.2%. That was the discussion we had earlier. So my question to you, why are you removing the revenue paid to the company by rail customer from the total revenue?
Well, in the resubmission, LFE 1, we did remove the expense. No, I see what he's saying. I'm talking about it in another tab. It has nothing to do with that.
Let's go back to your C 3.2 exhibit one more time. Okay. On line 26, we already established that 98,993 included purchase water cost that the company paid to Connecticut Water. So where in this application did the company remove that expense that was included in the test year?
So on C 1.2, on line 46, in our summary of proposed adjustments,
Give me 1 second. It says C 1.2.
yes, we adjusted that out.
On which line?
46.
Okay. Um, so what does the company do with the difference between what you receive and what you paid?
Would be allocated to any expenses we incur for Rye Hill.
Let's go back to Wicca. I'm gonna leave that for the time being. The capital investments associated with approved Wicca projects. Those are included in your test year planting service, is that correct?
Can you repeat that, please?
My question to the company is the total investment associated with approved capital projects, those amounts are included in planting service for the test year, yes or no?
We still don't understand the question.
The question is, the authority approved certain level of Wicca investment for the company. The cost of those approved projects that are capitalized, are those costs included in your test year planting service? Yes or no?
Are you asking if any of the capital projects, including Wicca, are included in the Rye Hill system?
My question for the company, your test year planting service that you propose in Schedule B 1.0 and B 1.1, does that planting service include all costs related to approved Wicca projects for which the company has a Wicca surcharge?
Please, none of the Wicca projects are in there. Right.
There's no Wicca projects in that number.
There's no Wicca project in your planting service as of 2024? Where are they buried? The financial statement reflect all your capital addition through 2024. Subject to check that will include all your Wicca projects, because those have been approved as of subject to check in docket 120707 WI 19 in a decision dated December 28, 2023. So why would that not be in your 2024 planting service?
What would be planted service? The Wicca projects for 2023 that were in that docket are included in planned service, but we didn't do any additional Wicca in 2024.
I understand that. My question to you is, all capital projects approved for Wicca, as those capital projects being enrolled into your planting service as of December 31st, 2024?
Yes.
Okay, thank you. Subject to check in that last Wicca decision in docket 120707 WI 19, the surcharge approved therein was 9.98, is that correct?
Subject to check, correct.
Okay. And that rate was effective January 1st, 2024, is that correct?
Subject to check, I believe so, yes.
And we are now in 2025, is the company still charging its customer that such Wicca surcharge rate of 9.98? 98.
Our current WICA surcharge is 10.58%. That was approved on April 1st, 2025.
Allowed to collect more than 10%. Okay, the weaker revenue subject to check is to collect property taxes, income tax, depreciation expense, and return on the capital investment. Is that correct?
Yes.
Okay. Could the company explain to me what the RAM adjustment, what was the purpose of the RAM adjustment that the company file every year? What's the goal?
What is what? I'm sorry.
Goal of the revenue adjustment mechanism.
Two,
And Commissioner, I'm going to object to the question because it really calls for a legal conclusion as to what the goal of the RAM is. Perhaps if Mr. Bakari could restate it.
Yeah, I think Mr. Bakari, I think you can ask the witnesses their understanding of what the purpose of the RAM is.
Okay. When the company file its RAM adjustment mechanism, what is the company trying to achieve in those RAM adjustment dockets?
it's a true up to our allowed revenue, whether it's over or under, we adjust and either give a surcharge or credit to the ratepayers. And it's approved by PURA
Okay.
every year.
So annually you file a reconciliation mechanism to true up your actual revenue to your allowed revenue, is that
Correct.
correct? Okay. So the revenue approved in any rate case decision, the company is allowed to recover any shortfall due to conservation or lost sales, is that correct? In the RAM docket?
Yes,
Is that yes or?
yes.
Turn to your response to RIU 111 exhibit and late file 1, schedule C 1.1 again. Actually, schedule C 1.2.
He didn't reference, he said RU 111.
So wait.
He said to go, he didn't say, he just said the schedule 3. We'll see 1.2 and then RU 111.
Mr. Bakari, did you say the exhibit to RRU 111?
Yes, sir.
Thank you.
Are you ready? Okay. If you look at the exhibit RIU 111, and you go to Excel row 469, my question to the company is subject to check for 2024. The management fee, which the company characterized as holding company expense, subject to check is 36,000. Can you identify for me in C 1.2 where that amount is reflected as an expense?
That'll have to be a read-in.
All right, that'll be read in B. Mr. Bakari, can you help me with that RU reference?
Is 111 exhibit, Excel row 469.
So it's
And the management fee is 36,000 for 2024. My question is for the company to reference in C 1.2, which line item has that expenditure?
so the question is whether that expenditure is reflected in C 1.2?
Yes, sir.
Okay. So I have that as reference RU 111 exhibit Excel row 469, the item of $36,224, whether and where that's reflected in C 1.2 in the inlay file 1.
If I want.
Okay, thank you.
If you remain on the same exhibit, but you look at Excel row 453 and Excel row 459, one has the merchandise and jobbing revenue, and the other has merchandise and jobbing expense. My question to the company is where in C 1.2 that revenue subject to check for 2024 is 31,727. And the M&J expense for 2024 subject to check is 23,521. Where in your income statement, Schedule C 1.2, those revenue and expenses for merchandise and jobbings are reflected in your late file 1, Schedule C 1.2.
So Bakari, sorry, I'm still catching up. What was the row reference for RU 111 for those expenses and revenues?
For the M&J revenue and expenses,
Yes.
for the revenue is Excel row 453. For the M&J expense is 459.
Gotcha. Okay. And to the panel, is that going to be another read-in? Okay.
Chairman, those are all my questions.
Okay, let me just nail down this read-in. That'll be read-in C, reference RU 111, exhibit. Explain where the M&J revenues and expenses in rows 453 through 459 are reflected in Schedule C 1.2 of late file 1. And I actually had some follow-up questions from Mr. Bakari's cross, if I may, just before we get too far afield. For LFE 6, around LFE 6, Mr. Bakari was asking questions about New England Water Services. And Ms. Wright, I heard you say that expense was removed from the rate year. Is that correct?
Yeah.
Okay. And I heard testimony that that's New England Water Services is Mr. Flagg's, that's Mr. Flagg's company. I was just trying to reconcile that actually with the narrative response to late file 6, which explains Mr. Flagg's services. That was the late file that asked, like, weren't those expenses disallowed in the last rate case, and the narrative responds that they were disallowed in the in another rate case. I guess my question is the testimony today that Mr. Flagg's services have been removed entirely from the rate year, or is it just a portion of them associated with New England Water Services?
They're entirely removed.
Okay. Thanks. And my other question was, I'm still just not cleared, and maybe Mr. Bakari is, but I saw your reference to the late file 1, the purchase water expense being backed out. Is the intent, just in case, like, I'm not sure whether Pura staff is seeing that expense somewhere else in the late file 1, but is the intent to remove entirely the revenue and expense associated with the Rye Hill purchase water?
Correct. That was the intent.
Okay. Thank you. That was all I had of.
Mr. Chair, before we get to Ms. Schul, I did want to actually follow up, maybe conceptually, on Rye Hill rather than looking at the specific numbers. So there's been testimony that the company collects from the Rye Hill customers at the rate approved for Connecticut Water.
Correct.
But the company pays for that water at a different, presumably lower commercial bulk rate.
Correct.
So the company does bring in revenue associated with those customers.
Correct.
Where, if anywhere, is that revenue reflected in this application?
Could you just repeat the question, please?
Sure. So we spent a little bit of time on the purchase water expense being reflected and then backed out. And my question is the revenue. To the extent there's a delta between what the customers are paying you for the Connecticut water that's supplied and what the company is paying to purchase that Connecticut water, where is that revenue reflected or tracked, if at all?
We removed all the Rye Hill revenue from the exhibit. The entire amount, it shows in the revenue section, the Rye Hill.
Okay, so
We backed it all out, yes.
so is it fair to characterize that the company is essentially treating this as an entirely separate system?
Yes,
Okay. I believe your testimony in response to Mr. Bakari's questions was that to the extent there is a net positive revenue that's used to pay for any additional Rye Hill expenses beyond the purchase water.
correct.
Where, if anywhere, is that tracked?
Currently, the way that the time and the operations time is booked to any outside activities, we're not tracking that currently. You know, gate valve cleaning, exercising, leak detection. We're mandated to do leak detection service in that system every year. So we have that done by an outside contractor. Currently, in light of what's happening here, we see the need to segregate those Rye Hill customer services on a separate line and track that individually now, those costs. So currently, we're not able to track any costs for gate valve cleaning, repairs, or service. It's all just basically the same GL code that we use for our Hazardville customers.
Okay, so is there any way, based on the record that the authority has, to know if the effect of Rye Hill is a net positive or negative on the company writ large?
Say the record you have, probably not. The system isn't that old. It's not very labor intensive at this moment. So there is basically just some of your standard things that are happening. There aren't any issues like Waterbury happening in that section. So there is not currently a big demand for service repairs or anything.
So if there isn't a big demand for service, are there expenses? If it were a net revenue, where are those funds reflected?
I'm not sure.
Not specifically reflected.
And what, if any, accounting does the company keep to track those funds? Is it in a separate account? Is it a separate line item? I'm just trying to understand where that.
Not that I'm aware of. There's the revenue, and then there's the purchase water, and any miscellaneous expenses related to Rye Hill are not tracked at this point.
Thank you.
Just one clarification. The additional services that you provided rail customers, subject to check, you using your existing resources that are already being paid for by your customer. Is that correct?
Correct.
Okay. Thank you.
I have one follow-up on that. Do you know whether, I mean, essentially what we're talking about here is the question of whether the net revenue, if you, from Rye Hill, to the extent there is any, ultimately becomes net income, or whether it is offset by expenses that aren't separately broken out. Is that revenue, at least currently, revenue and expenses reflected in your quarterly earnings reports that are filed with PURA?
Yes, they would be in the numbers, yes.
Okay. And I'm hearing testimony of like that for the purposes of this case, there's a thought about kind of separating them out. Would those also be separated out from the earnings reports in the future?
If they were separated out, yes, they would be separated out in the earnings, yes.
Okay. Thank you. That's all I had. Ms. Schuler, are you going? Go ahead.
I would like to refer you to Exhibit A, late file 4. Maybe I should say late file 4, Exhibit A. And my question is about level 8 mapping. Would you please describe what this is about, level 8 mapping?
Level A mapping determines the area around our wells that certain restrictions would be applied to functions that would happen in that area, as far as commercial building or anything like that.
And when the program started?
I'm not sure when that started.
So started like 10 years ago, 20 years ago, 1990s, 2000?
I'm not sure exactly when the last time we had that done. Level A mapping.
So how did you determine that, for example, level 8 mapping phase 1 was $90,069, and this was determined that will be paid in 10 years? How did you determine this?
Again, that was during the 2009 rate case. I'm not sure how they determined that. That exhibit is from 2009.
So you had leftover cost from year 2009. And I'm going with the first phase 1. And this cost was, I was divided. It seems like was divided by 10 years. Yeah.
It would appear that way. Again, this exhibit was not prepared by myself and it was presented in a 2009 rate case.
Okay. I still have a question. Late file for Exhibit B, water supply plan from 2007.
Yes.
So this $14,311 was paid in 2017. Is this correct?
Repeat the question, please.
Was the $14,311 paid in 2017? This is for 2007 water supply plan. So my question is, what was paid for in 2017? Was it paid for consultant, for extra work that you were required to do on this water supply plan or something else? And when you received the final approval of 2007 water supply plan from DPH? Those are my questions.
Could you state exactly what you're asking for one more time, please?
I'm asking for what was paid for this $14,311. Was it paid for contractor, for upgrade the plan? DPH required you to do some extra work on this plan? And the second question is, when finally this water supply plan was approved by DPH?
The water supply plan was completed by an outside contracting service engineer. I'm trying to find a document that states from the Department of Public Health when the plan was approved, if it was approved.
So if I can help, you send us like late file 4, page 3, and there is a letter from December 1st, 2010. Is this what you're looking for? This was from the state of Connecticut DPH letter sent to you.
Yes, I see the letter.
Or maybe you have something else.
That's what I'm looking for, see if there's anything else related to 2007. I don't currently see any documents, short of that letter that states there's a meeting that was scheduled. Yeah. That's this year. It states there's a meeting that was scheduled on December 16th, 2010 to discuss the comments that were attached to the complete file. I'm not sure we submitted the entire file from 2010 with the letter from Department of Public Health with the issues that they had with the water supply plan from 2007. There's a number of pages. There's actually 6 pages of documentation from the Department of Public Health regarding the 2007 water supply plan.
So do you remember when finally this water supply plan was approved by DPH? Was it approved at all?
Again, I don't have any documentation showing approval, but the company then in 2012 started another water supply plan. So whether or not the 2007 water supply plan was just set aside since the company had to start another one in 2012 to address, and it addressed the issues that they had in 2010.
It sounds like you did not get the final confirmation from DPH that the water supply plan was approved. Is this correct to say?
It would appear that way, correct?
Thank you. I would like to refer you to late file 14 exhibit.
Is that 13 or 14?
1-4.
Thank you.
And this is exhibit.
Yes.
Okay, we'll be talking about completed 100% projects. And my first question is, what is the difference between column 2025, so this is like 1, 2, 3, fourth column, and a column, the cost to date. So in column 2025, for example, the first one, purchase utility vehicles, is $65,000, and then cost to date is $61,501.53. Would you please describe what these two columns represent?
Column in 2025 represents the estimated cost to do any of those projects or to complete the project. And again, it's a budget number purely for budget planning only. It's not a defined number that is determined at the time. And then reflected in the update is what was requested was if they were 100% completed and what the cost to date was for those projects if they were 100%.
So this is actual cost to date, yeah?
Correct.
All right. So for the purchase utility vehicles, how many cars you purchased for this amount, $61,500?
Which one?
The first line.
Of the vehicle?
Yeah.
That was the one vehicle that was purchased we had purchased one to replace the one that was damaged during an accident. And then we also purchased a second vehicle, a used vehicle.
And this is the total for 2 vehicles?
Correct.
Okay, so in the based on our previous conversation, the company was able to get some money from insurance for the vehicle that was in the accident.
That's correct. We were able to recover some monies for the replacement cost of the new truck.
So $61,502 is excluding this cost of the amount received from insurance?
Correct.
Okay. Next one is purchase radio frequency transmitters.
Yes.
Would you please describe or explain why the actual cost, that's what I will use for column cost to date, which is $59,815, I will round to $1. Vice versa, 42,000 that was planned for. Why is this difference?
There are, we were finding an increasing number of the radios that we use to read our meters are beginning to fail based on their age. So 42 was, again, was an estimated cost from the previous years that should have covered how many radios we had to purchase, but in all actuality, we ended up having to purchase additional radios above.
How many?
I'm not sure exactly how many radios we purchased.
So you plan in 2024 and your plan change in 2025? That's what you're saying?
Correct.
1 year planning is not that long. So maybe you need to scrutinize your planning better because it's about more than $17,000 more than what you plan for this item.
Yes, well, 2026 will be adjusted.
All right, now purchase meters, the next one, line number 4. Purchase meters for meter change out program. And over here, you also exceeded the actual cost is almost $97,883, whereas you plan for $88,000. Why this cost is much higher?
We've found more lead based meters in our changeouts that had to be replaced. We're no longer allowed to reinstall. So we found more lead-based meters that we ended up having to purchase new ones for during our meter changeout program. We're unable to determine how many meters are going to be lead-based until we remove them and actually physically identify the meter.
Do you keep any of those meters in stock somewhere in your area, in your?
Which ones?
The purchase meters.
Purchase meters, yes. We have some on the shelf.
How many of them usually do you keep on the shelf?
If we have a dozen replacements currently right now, that's about, it would be for just sitting on the shelf for size.
It doesn't, that's the normal.
Yeah, so we don't stock that many meters. When we start doing meter changeouts, we anticipate being able to remove the meter, install a new one, and then testing the current one and reinstalling it somewhere else.
Okay, thank you. Next one is line number 5, computer, software and hardware. And you are planning $10,000 and spend over $17,163.
Yes, again, it's a budgeting number that we put in there. And if we end up having to purchase new computers and or laptops or such, then that number ends up being what it is for current cost. There were a number of new desktops that had to be purchased due to the new Windows configurations that we needed. We had to upgrade our computers.
How often do you upgrade your computers?
My IT guy, probably every 4 years or so, depending upon the Windows software and how it relates to the work that we're doing.
It should be good at least for 5 years.
That's what we're hoping. We try to keep them as long as we can until the Windows programs don't allow us to use the software that we currently are running.
So how many computers you bought this year?
Not sure.
So next one is SCADA upgrades and maintenance. This one is almost online. It's $15,000 $14,966. So you didn't exceed your plans here. How did you plan here that you are almost?
Again, if I look back previous years, those numbers are placehold that are adjusted somewhat for inflation, and they're carried through the year, and it's just in anticipation of having to do any kind of SCADA components or SCADA software upgrades to our current system.
All right, now on the next page, that's what I have on the print. Item number 18, replace backend generator.
Yes.
And plan cost was 150,000. However, you spent 174,683 I'm sorry, $3. Would you please explain why so much?
The plan cost was to replace the generator somewhat fairly quickly. Unfortunately, due to the generators not being available for anywhere up to 8 months, we ended up we could not run the current generator that was there, and we ended up having to rent a similar sized generator to back up that station while our new generator was being built and then delivered. It is now since been delivered and installed on site. So that's total cost of that project to replace that generator. It was unfortunate we had to rent a standby generator to make sure that station continued to operate.
So this cost is rent plus cost of new generator. Yeah?
Correct.
How much would be if you would not be renting?
It would have been closer to the 150.
150.
The generator was unfortunately expensive to rent on a monthly basis, but we were at the mercy of having no generator to run that station.
And you rent for how many months?
How many months we rented? 8 or 9 months we had to rent the generator.
Thank you. And the last one, number 19, summer booster pump motor and variable frequency drive. So this one is beautiful because you plan $75,000 to spend and you spend $61,647. Would you please tell us how did you save the money? This one.
Once we got into that project, the anticipated rebuild costs of the current pump and motor that were in there, they would have knocked that budget out. And so we decided to look at purchasing new pump and motor configuration, which actually saved the cost. It was cheaper to purchase a brand new pump and motor than it was to rebuild the current one that was in place. So we opted to purchase brand new and keep going from there.
Okay, thank you so much. And now I would like to refer you to late file 16 -067 revised. And we will have this file on the screen, so it will be easier for us to talk about all projects that we need to discuss. And the project we will be discussing, almost all of them are highlighted in yellow. Okay, first we will go to line 37. My question is, it's hard to read from here from distance, but I can read here. All right. Who installed the main for 15 new homes in Summers, George Wood, and 4 Bridges Road?
You talking line 37 High Meadow Crossing?
Yeah, this is, so was it installed by the developer or by the company?
It was installed by a developer.
And who paid for installation of main?
Developer pays for the installation of the main and services.
All right, and then when everything is complete and the project is done, how it happened that you ended having this main? You maintained the main and now belongs to you. Would you please explain?
Once a developer installs the main services, the main becomes the property of the company. The owner has installation rights to that main for 10 years. So if another service is to be installed on that service pipe, he's allowed a refund, or we have to collect a refund to give back to him for the installation of another service along his main that he installed.
So I understand that developer simply wants to get some money back. If somebody else wants build a house over there in this new development, so then the developer wants to spread the cost and give, and so the new owner of the house pays share of the cost. Am I correct?
If the developer, in this case here, the developer paid for the water main and the 15 connections for the 15 homes he was installing, if an additional person besides the planned development wanted to attach to that water line, the developer would be entitled to a refund for cost, 50% of the cost of the frontage of the property.
Not the company, the
Not the com-
developer.
Not the company, no.
Okay, thank you. Why the company calculates depreciation here? The company did not pay for installation of main.
That's, why do we depreciate that?
Maybe I will ask next question and then Ms.
Our plan, it's ages. I understand that, but what's the generalized question is? That's our plan. And it's depreciated over time as it becomes a plant, the property of the company, so it's depreciated over time.
But you did not pay the cost of the main installation.
No, we don't pay the cost of the main, but unfortunately, we have to pay tax to the town that that water main is installed in. Becomes our plant.
Taxes are different than depreciation.
Yeah. Understood.
Just for clarification, are you looking at X 37? Okay. If that is a contributed plant, the question is, why is the company deducting the depreciation expense for plant that was paid for by a developer? I understand you have to pay the town property tax because now you own the property, but it's not your investment, so there shouldn't be any depreciation expense related to plant that was contributed by the developer. So I guess that's what we're trying to understand. Why are you calculating depreciation expense on plant that was contributed by
Understood.
body?
We have to find out because that was in 2011. So I'd have to find out from our accountants why it's on here.
Okay, thank you.
Okay, next is line 44 and 45. And similar question, who installed the main on Durkee Road and paid for the main installation and services?
Developer,
Developer too, yeah.
correct,
Similar situation,
correct.
okay. Like for High Meadow Crossing,
That's correct.
okay. Line 46, the same. Okay, this one is different question because over here, DEP, former DEP, now DEP, paid some. I don't know because the description does not show how much DEP paid for this line installation and how much company paid, because I assume this was shared cost.
Now, Deep paid for that entire cost for that water main installation and the connection to the services due to contamination of the wells in summers on that street.
Okay, thank you so much. So the company just, it was turned over to company once everything was installed, correct?
Correct.
Okay. Next, lines 54 through 57, the same question. Who paid for this installation, for service installation and cost of the project?
Which lines, please?
54 to 57. It's highlighted. I cannot see
No,
that.
that's fine. That was a company project.
So the company paid for it?
Correct.
Okay.
At Broadbrook and Abbey Road, there was a gap in the connection of the water main in that intersection.
Okay.
Company was informed that DOT was going to rework that intersection with new lights and increase the footprint of the intersection. So the company decided to install water lines in that intersection before DOT was to complete any of their work to avoid additional costs if we decided to complete that connection.
All right, thank you so much. Now line 72 and 73. The same question. Who paid for main installation and services?
Developer.
And you just received the main after was
Correct.
completely done. All right, thank you. Line 77. Who installed this line? It's saying Nanowica Construction, so was it company or was it?
Not sure. If it was a non-WICA project, it would probably have been the company. You give me 2 seconds. For that particular project, the new main construction, yeah. With the company worked with the town and the contractor that was with the town to install a spur from our current water main across the road the town was working on into a side street that we are planning to connect in the future. And we wanted to get that work done while the road was being constructed or reconstructed. So the company paid to have a gate valve installed and a water main, a section of water main brought across the road into a side street for our future to prevent us having to dig up that road.
So this was company's project?
Correct.
Yeah. Okay. Now, line 89 and 91, there is no description of, is just no description here. So were those services approved approved under WICA or non-WICA?
If you're referencing the WICA projects, yes, they were approved.
Right. Lines 109 through 113, please. Who installed and paid for main and services on those projects? So there are a few projects.
The developer paid for the extension of that water line on Hazard Avenue.
Okay, thank you. Line 108.
Yes,
So this was developer too?
correct. Developer extended the water main to allow service connections to some additional homes that he was building.
Okay, so now please go to 123. And this is about generator. And I had some issue with the description because it's saying engineering design services. So is the generator installed or was it just design or is it installed and design? Would you please explain your description? better?
No, that's, the generator was installed. There was no engineering design. The generator was sized by the generator company for us based on the load for that station.
Okay, so what the term means, engineering design services, was the company name or?
Yeah, it's just a name we put in there in case we needed engineering involved with anything on that. So that's just it's just a name. So it really should just be Avery 3 generator installation.
Okay, thank you. Line 147, please.
127
147.
47. Yes,
So who installed this main?
company did.
Company, okay. And 184, please. On 184, it's the statement that the company acquired Summers water system in January 30, 2012. Is this correct?
Correct.
I could not find in our files any information. Did you come to Pura for approval of this acquisition?
I believe this was approved by Pura when this Somersville system was first built in, I'm gonna say 1988.
Oh, 1988?
Yes. So I believe that was approved with the town of Summers, Hazardville Water, the authorities about permission that the way this system was built, designed, the water company initially was charged with maintaining the system. We were allowed to bill the town of Summers for some maintenance work. And then after a certain period of time, I believe the company was able to basically just acquire the system and not have to purchase. This is once whatever, well, in the original agreement was, however, so many years after it was built.
Would you be able to give us the docket number that you came to us? It doesn't have to be now, maybe by the end of the late files hearings. If you would give us the docket number, I would
It's
appreciate
possible I could probably, give me 2 seconds. I probably could find it. There's a docket number.
If you don't have it now, it's fine. I understand. 1988. No, who remembers?
I have an agreement from 1988. System should be constructed in conformity with public utility control. I have the agreement. I'm not sure if I have the docket, but in the agreement, which I believe was, again, part of a docket from 1988, it doesn't, the agreement doesn't specify, initially here, it doesn't specify a docket number, I believe. It's interesting that in reading it right now, Vinny was involved in that agreement.
We could certainly,
I could find something for you if there's a docket. I mean, it does have some information here. So
maybe what, can we make that read in D? If possible, provide the DPUC docket number for, what's the name of the system we're looking for the
Summersville Water System.
Summersville, okay. So it'd be provide DPUC docket number for approval of acquisition of the Summersville system. Oh, just Summers system. I mean, we can see whether we can dig that up before the end of tomorrow. I mean, Monday's hearing. If not, then maybe whatever you're looking at, Mr. Sherwood, could be offered as a supplement, like whatever documentation exists.
Yes,
as to-
I believe we've filed this. I believe I had, maybe not this one, but may have filed in 09 too, but certainly can file this agreement.
Okay. Thank you.
Okay. Next question. Are there any other projects on this list completed by developer? And I missed them on this list. Or was I able to pick up all of them completed by developer?
Looks like you found them all.
All right, so now I don't see a project on Copper Street on this list. What's the reason for that? When was complete? Was it in 2024 or 2025?
Cooper was completed in 2024.
So I assume that it should be on this list. Is it just simple omission?
If this is for 2024, yes, it should be on this list. You're correct, it's not on the list.
Okay. Now, at the end of the list, there are lines from 192 to 231, and they are highlighted in gray. Is there a reason why they are highlighted in gray? Or there is no reason? Because
There is no reason, I don't believe.
no reason. I was thinking just because you don't have any description of those projects. So why don't you have description?
The
reason those are highlighted is because we don't have a description, and because they're so old, they were put in our fixed asset software, but with no description. So we don't have the descriptions for those.
All right, okay. Late file 20, please. I'm done with the file 16.
Michelle, can I actually ask some follow-up questions on late file 16 before we jump away from it? Michelle asked several questions about costs paid by developers. Would that, your B1 schedule shows contributions in aid of construction as an offset to rate base. Would you agree that that would be, is that where we would normally see reflected? Like if you have costs, if you have property that was paid for by someone else, would you see that reflected in your B schedule as a contribution in aid of construction as an offset to the total plant value?
I believe so.
Okay. Do you know whether the developer costs that Ms. Schul was asking about are, I'll back up. So I was trying to kind of match up your B schedule to this exhibit. And it's hard because your B schedule isn't only the plant that's entered service since the last rate case. It's inclusive of the yet to be depreciated plant that was authorized in your last rate case. So the numbers aren't going to match up, but I was trying to kind of get a sense of materiality. And it looks like the total costs here, I don't know, I selected and summed it up, but it was something like 13 million or something. I guess my question is, do you know sitting here whether the projects reflected in this exhibit are already, whether the developer costs are already reflected in the contribution of aiding construction offset reflected in your B schedules?
We would have to look that up. Our auditors do all the adjustments, so we can get that information.
Okay. My last question was about depreciation. It wasn't clear to me, and based on Mr. Sherwood's response regarding taxes, it's my understanding that sort of like as a business outside of the sort of regulatory accounting of calculating depreciation expense to get your return of investment, you also are depreciating your assets for tax treatment. Is that correct?
Correct.
So is that the reason? I guess my question is the depreciation reflected in this exhibit supposed to be reflective of depreciation expense, or is it just showing like how you're internally depreciating these assets for assets? I don't know why I keep saying for tax purposes. Do you know?
This is reflecting book tax.
Okay. Thank you. Sorry, Ms. Schuley.
Yeah.
If I may, Ms. Schul, before you proceed, Mr. Chairman, did you want a late file regarding whether the developer contributions are netted out?
I thought about that, but here we are at the late file hearing. And it seemed, I was actually considering maybe if it makes sense to you, Attorney Bogan, this is a concern, at least speaking for myself, of just wanted to make sure that that's reflected. So maybe it could be addressed in the brief, like if that makes sense.
Happily.
Thank you.
Late file 20, please. Oh.
Sorry, go ahead, Mr. Sherwood.
The question for the Somersville system, Somersville docket 870719.
870719.
Correct.
Okay, thank you. That will satisfy read in D.
Thank you. So now late file 20, please. And this is about Cooper Street project. So the project cost $183,980. And according to the bid that you submitted or the company submitted, the bid is dated October 1st, 2024. the project should have cost $156,646. Explain the difference between the cost that the bid cost and the actual cost of the project. And you mentioned before that the project was completed in 2024. So must be completed shortly after you receive the bid.
Correct. The work that was going to be done was for that water line to be replaced. And we determined that the water line was not connected to the side street at the end of the street. If you look at the map that I included, it was not connected to Gordon Lane. And we decided to connect that to Gordon Lane to prevent a dead end on that small line. So we had a change order to extend that line and then make the connection to Gordon Lane.
And
in the pavement.
How long was the extension or the extra?
The extended was probably about 60 feet or so, but the work had to be done in the intersection. And we had to include pavement in that intersection. And that, unfortunately, that Gordon Road, at Gordon Lane, all this work was done off road. These streets had recently been done with the town. So we had to pay to repair and restore the intersection when we made our connection.
Okay, thank you so much. Late file 33, please. And this is about meter reading expenses.
Yes.
What is included in the annual maintenance of?
What it is we have a piece of electronic meter reading equipment that we do an annual maintenance contract where they take it and they make sure that it's working correctly. And if we have an issue with it, where they will allow us to use a replacement while it's being repaired, if it needs to be repaired.
Who is reading meters?
Pardon?
Who reads meters?
The company reads meters.
So company employee, yeah?
Correct.
And how the meters are read? How do you read?
Meters are read with a drive-by system with this piece of electronic equipment, an antenna, a laptop in the truck, and then the meters are read with the radios that are attached to the meters.
Okay, thank you so much. Late file 50, please. So the company states that the Grant Road well has not been tested for PFAS.
You say, was that
Late
five?
file 50.
Oh, 50. Correct. The well is currently offline, and when we were testing for PFAS, we did not activate it to test it for PFAS.
When is company planning to test the water from?
Grant well water, when we have the other issues as far as the contamination with the coliform and E. coli addressed, and looking for either the treatment process that would take care of that, we would then install a pump in that well and test it for PFAS before we went ahead and did any type of treatment process to place that well back online.
Is the company aware of EPA's testing requirement regarding PFAS? And that if the company decides to keep this well active and use in the future, the PFAS needs to be removed by 2029?
Yes.
So are you thinking that you will be ready with this well?
If we're not ready for reactivate the well, we will test that well for PFAS before the deadline.
Okay, thank you. And last, my question is regarding late file 35 chemical expenses. Thank you for submitting this late file. And thank you for submitting all the costs since 2011 to 2025. And if we look at the prices, and then also you gave us column how they increase by percentage between 1 year and another. And for example, for sodium bisulfite, it was not much increase. It was just year 2022 when it was 25% increase. And I calculated the average for 15 years. And this is subject to check, is 33 cents, 33.6 cents. And then if we go to sodium hypochlorite, there are some changes, but the biggest was again in 2022. This was the COVID time. It was 107.7%. But the rest was pretty stable. So the subject to check again, the average price for this chemical would be 17.2 cents. And for Aquadin liquid, it is again, the biggest increase, 25.9% is in 2022, and the rest is pretty stable. So going back to your first request to increase cost of chemicals by 44.5%, don't you think that this is too much?
I don't.
Can you repeat exactly what you're asking?
I'm just asking if you did not exaggerate request for increase of chemicals used by company. You requested approximately 45% increase. It was exactly 44.5%. Looking at your at the official first request. And then when we look at the cost of chemicals for the past 15 years, and even looking through percentage, those percentages are not close to 45 or 45% of increase.
In looking at LFE 35, the Word document, just to clarify, we were low on the test year for expense because we didn't purchase it until early 25. So the adjustment is just to adjust to to normalize it.
I understand, but you have average for 15 years. It's not only for the past 1 or 2 years.
Well, it wouldn't be for 15 years, it'd be more like 5 years, few years. I mean, so that's how we calculated that adjustment. It wasn't related to, we looked at historical past several years and we went.
So we have costs also for the past 5 years. And the average for 5 years is not close to 45% of increase.
Okay.
Thank you. That's all my questions.
Thank you. Can we return to, good morning, Stephen Capozzi with Authority Staff. Can we turn to late file exhibit 20, please, which I believe is the Cooper Street project bid? Are you there? Okay, thank you. I believe, there's one bid for this project. Is that correct?
That was correct.
I believe there was testimony from the hearing, the company explaining why there was only one bid for this project.
Yes.
Okay. My questions aren't to revisit that project specifically, but I had more general questions about how the company seeks bids for individual projects. Does the company have a policy that requires multiple bids or competitive bidding for capital projects?
Typically, yes, the company receives request bid for multiple contractors for our projects.
Does the company have a written policy outlining the requirements for that process?
Not written. They asked in one of the exhibits here for a single project use, which this one was. But for the most part, the company seeks multiple bids for our projects.
Do you have defined criteria governing how you conduct that process?
No.
Can you provide a summary for how you would look for bids? You know, what you would typically do?
If it's directly involved or the company's directly involved in it, we will contact multiple contractors to do that work, and then ask them if they're interested, and then have them, if there's a package, sometimes like in this case here, it was a pretty small project, but they just ask the contractors if they are interested, and we would then fill them with the details, and then they could submit a bid. For our larger projects, which are usually our WICA projects or anything that involves our engineering, then the engineers will typically advertise or solicit bids from multiple contractors for the work to be performed.
Do you have a defined number of contractors you look to solicit for bids?
We have a list of large contractors that we give to the engineers, and they usually update that for us depending upon, sometimes our list is outdated and if the contractor is no longer in business. But for the most part, if they will look at that list and if they have any recommendations outside of that list, they'll let us know that they're sending that out to multiple contractors for bid.
Is there a number defining the minimum number they send out to?
No, I mean, there isn't a minimum number. I know that we typically receive 3 or 4 or 5 bids for our larger projects.
And how many contractors are on that predefined list approximately?
Approximately 30.
Are there predefined exceptions to when you would follow that process? So when you would not seek bids from multiple? Are there like predefined exceptions to say, you know?
No, typically there's no exceptions to that list. For that.
Which employees conduct the competitive bidding process or the bidding process?
In this case, myself and my general manager for large bids, again, for large projects, it's usually the engineers will advise us on who they're sending it to. And then we do bid openings and bid recordings. And then then they determine if the contractor, based on their bid, is qualified to do the work that we're requesting to be done. And then they'll advise us who the best contractor for the work would be.
Okay, what is the bid opening and bid? What was the other term you used? Bid opening and bid?
Bid opening, that's usually conducted at our office.
Can you describe what that means?
Typically, contractors, if they're choosing to bid a project, they will submit a bid package that during the bid opening, the bids will be open and read out loud. Or they the cost will be open and bid out and read out loud to any of the bidders that are there if they show up in person. And then the bid packages are then examined, like I said, and determined by our engineers who the best contractor for the work would be done.
Okay.
And he would then advise us, or they would then advise us who to send a notice to proceed to.
Who makes the ultimate decision on selecting the bids?
Collecting them or selecting?
Selecting the vendor.
The vendor? Myself.
Any other approvals required?
No.
Does the company maintain documentation for, throughout the bidding process?
Yes.
What does that documentation look like?
It typically will, we get the bid package from the engineers or such, and then the notices. Once that is all done, I receive back from the engineers, the bid quotes, all itemized, broken down by contractor. And then the final decision is determined, and then a notice to proceed is given to the contractor to then submit for any submittals that he's required to submit to the company for approval for materials. And then once that's reviewed by the engineers and myself, the notice to award is then given to the contractor for the project to start.
Okay, and so the company retains documentation for all those steps in that process?
Correct.
Okay, what information is in the bid package?
Bid package usually includes the length of pipe, services, hydrant replacements or such, any type of materials, the material type that we require. And then they've got a bunch of, I would say, standardized boilerplate information as far as safety and soil controls and all the other things.
Okay, thank you. So it's the information requirements for that specific project provided by the company.
Yeah, the information specific to that project, but then there's all the other things for the that the contractors will have to follow.
Okay, understood. And if an engineer is making a recommendation to you on a specific vendor or a recommended vendor to be selected, their justification for that selection is included?
There's justification, but usually it's the low bid.
Okay. So that was going to be one of my questions. The purpose of this process is it to ensure controls on costs for projects?
Correct.
Is there any other, does it also ensure, for example, quality of the final project, final construction?
Quality of contractors' background or previous work, not just by ourselves, but by somewhere else, anywhere else they may have done, is reviewed and determine whether or not we should engage with that contractor, even though he may be low bid, depending upon any issues that they may or may not have run into in the past.
Okay, so
We'll factor into that decision also.
okay, and will that information be recorded in that as part of that? Would that be documented, for example, by the engineer?
And it's usually not, I wouldn't say specifically documented. It's usually some verbal just discussions.
Okay. For your capital projects, how often are you using external vendors to perform the construction or to complete the project?
Usually all of them.
And do you have the number of, so for the larger projects, you say you utilize engineers to perform this work. The number of employees approximately doing this?
Doing
Doing the bidding process, like working through the bidding process?
internally?
Yeah.
Just 2.
You mentioned there was a change order for the Cooper Street project. Can you define what you mean by change order?
Once it was determined that we were going to make some changes to the initial project, we asked the contractor what that initial cost, what he estimate the initial cost to be. And then we decided to go ahead and move forward with the changes that he previously didn't bid for.
Do you have any policies about how you handle change orders?
Again, change orders typically are on our larger projects, are routed through the engineers for approval, discussed, and then decided whether or not the company is going to pay for the entire change order, or we disagree and we'll only pay for a partial change order.
Okay. And that would require approval from yourself?
With approval myself and recommendations by the engineers.
Okay. And that information would be documented as well?
Correct. It's documented as a change order to the original contract.
Okay, does the company evaluate whether it's consistently following the bidding process that was just described? Do you look back on projects and see where you have followed that and where you have not?
Yeah, I could look back at projects and look at the bid sheets that we received for previous projects to determine if we, some projects we receive 2 bids, some projects we receive 5 or 6. It depends on the contractors, how busy they are at the time of year.
Okay. Okay, can we turn to late file exhibit 21, please?
Yep.
Very good. I'm still not there. Apologies. Okay, so I see here a description of the process for a sole source project. Is that correct?
Yes.
Okay. Who is the company officer reviewing? So I see a mention here of a company officer conducting a review, a formal review. Who is the company officer?
That'd be myself,
Okay. And it says here equivalent authority. Who might be an equivalent authority?
my general manager.
I see here there's specific criteria for the project. Would this be the stuff that's included in the bid package? The requirements?
Yeah, I mean, typically it's included in the bid package. We also look at the, if we thought something was offline as far as material, we would research that material ourselves to see what those costs were, to see if we're being given the proper estimates.
Okay. Would that include cost requirements for the project? Like,
We typically ask for costs for the project, and then we also would look those costs up. In this case here, we had anticipated potentially purchasing the materials ourselves. But it was determined that it was better for the contractor to buy the material, then he would know he had all his material for start date.
okay. At what stage in the process would you decide, do you decide typically or specifically to follow a sole source project versus seeking out multiple vendors?
It really depends on the cost, I guess. If we looked at the cost and determined that it was single contractor was trying to take advantage of the company, we would not proceed with that project. We would then probably put that project, either have an engineer start looking at it or put it out to bid. In this case here, for the Cooper Street project, we informally contacted a number of contractors to ask them, would they be able to do this for us with that short period of time? And they were not able to. They said they were not able to assist us with the installation of that pipe. So.
Okay. Do you have a formal set of requirements or steps to follow to just help you decide criteria to implement or to follow to help you decide when to, is that process formalized with defined criteria for when you would decide to go through with a sole source project versus seeking out multiple bids?
No, again, I believe it's just after reviewing
Was that
the
done?
quote, after reviewing the quote from the contractor, we would determine whether or not we were going to proceed with the project or look at another avenue.
Okay, so it's fair to say that's done on a case-by-case basis?
Correct.
Project by project, okay. And the company maintains records for the, similar to a competitive bid process, the same level and type of documentation?
Yes.
Okay.
For this particular project, the company uses our purchase order system, so it had to be, once it was approved, then it was a request for a PO was initiated to a capital project number request for PO was requested for this project to document costs associated with the project.
Okay, so that's your, so how does your purchase order system work though? I mean, I'm not
Purchase
sure.
order system, typically, quotes are obtained by, someone requests a material to be purchased. They then ask, they're given the go-ahead to request a quote for that material. Quotes are, reviewed or given to me, and or my general manager for review. And then the purchase order is, given to that, to purchase that material or equipment.
How often are you following a sole source, like procurement versus, following multiple bids?
Not often. I mean, this is probably more of a one-off than most. But again, there are some, if you really wanted to, there are some vendors that we use that they are the only source. So in some projects, changing a valve or something, there may be only one vendor that's qualified or capable of doing that work. And then it would be a source, that would then be a single source project.
And would the company have documentation to that effect saying, you know, for this type of product or this type of service?
That it's specific, yeah, yes.
Okay, thank you. Let's turn to late file 16, please.
What number?
Late file 16.
Okay.
So, I know there was some discussion on this earlier. I just have a few clarifying questions. So if I'm looking at the project description column in N, and do you see that column?
Yep.
Okay, so if I want to identify which projects are WICA projects and which projects are not WICA projects, I could look in that and I see, you know, I see WICA in some and WICA in others. So can I 100% identify non-WICA projects
Correct.
by seeing nothing about WICA in there? That would be correct. Okay. Okay, so there's no projects in there that would be WICA projects that are not explicitly labeled as WICA.
That's correct.
Okay. So when I filtered out, so I took this and I filtered out all the projects that were labeled as WICA, or had WICA in that description somewhere. And it looked like there were about 4.5 million in project costs that were not WICA. Does that sound about right?
Subject to check, I would agree.
So these non-WICA projects are sought for incorporation. Are those costs being sought for incorporation into base rates as plant additions?
Can you repeat the question, please?
Yeah, so if subject to check, if there's about 4.5 million in project costs that are non-WICA projects, are those projects totaling 4.5 million approximately and subject to check? Are those projects also being sought for inclusion as plant additions in this application?
Yes, they're included.
Okay. And some of those projects were developer funded projects based on the discussion earlier. Is that correct?
Yes.
Although they wouldn't be in there.
What?
If they were
They
developed.
wouldn't be in there. I'm sorry, I'm gonna have to look that up.
Okay.
I don't know if I want to be correct, so.
Okay. Is there any way to tell in the application, so excluding this exhibit, although referencing it, but excluding this exhibit, is there any way to tell in the application which projects Is there any way to identify individual projects that are sought for recovery for the first time as plant additions? If I'm looking at the exhibit, if so, can you point me to where?
Can you please speak louder? Because
Yeah, oh,
my
sorry.
associates can't hear.
Yeah, sure.
Sorry.
Is there any way to tell, looking at the application, which individual projects are being sought for recovery as plant additions in the application?
They should list it.
We'll have to do a read-in for that.
There might be two parts to this read-in, Chairman. I think it's, one part is whether, the first question, I think, which was approximately 4.5 million in costs, and you can maybe confirm whether I did my math right. But whether those are actually being in exhibit, late file exhibit 16, whether those are included as plant additions, and what level is. And then the second question is where in the exhibit, can you point to where in the application whether I can see individual projects sought for recovery as plant additions? Did that make sense?
Yeah, sorry, Mr. Capozzi, I'm gonna confirm that in a second. Do you say 4.5 million? Okay, so I have for read in E, confirm that late file 16 attachment reflects approximately 4.5 million in incremental plant additions that were not approved in a prior WICA proceeding. Does that capture your first part, Mr. Capozzi? And also whether there's a location in the application where individual plant additions are identified. Does that cover?
That does.
And I actually have a follow-up question quickly, just based on my understanding of the exhibit of 16 attachment, which I somehow just closed. My understanding of that exhibit is that is intended, the original kind of RRU response, I think it was, yeah, I'm looking at it now. So RRU 67, I think. It's my understanding that this exhibit is intended to capture every project that has entered service since the last rate case, since 09, 06, 10, inclusive of both WICA and non-WICA projects. Is that correct?
Correct.
Okay. Thank you.
Chairman, I would just clarify that question because I think that's what I was trying to get at, and I think maybe I was being too vague. Sorry, let me pull it up so I can read it. So I think there's one additional clarification. Here we go. It says the RU 67 said provide all utility rate-based plant additions implemented by the company as capital improvement projects since the last rate case. So I think there was an additional component of not just in service, but that they're, although maybe it's the same thing, but not that they're in service, but they're also included as plant additions in rate base, which maybe is the same. But I think that's where I'm trying to get clarification about the developer funded ones and not. But it sounded like from the discussion earlier about the depreciation, this exhibit may have been targeted more for just to include like everything, not necessarily things that were they're sought for recovery as plant additions. Right.
Originally, it included like prior to 2009, and then we adjusted it. That's all.
Okay. But I think the read-in will cover that. So I think I had one or two more questions about this. Oh, okay. So if I'm looking in cell G11 on exhibit 16, I read a total of about 12 million in costs attached to projects.
12.7 million?
Sorry, 12.7 million. Thank you. So that includes both WICA and non-WICA. Is that correct? Costs?
Correct.
Okay. Um, okay. And so then my question is that total 12.7 million sought for recovery? I guess clarification whether that's sought for recovery as plant additions in the application, for sought for inclusion in rate base in the application or not?
And if I may, Mr. Capozzi, I think this is kind of the same question I asked as a briefing prompt,
Okay.
which is essentially the question of whether, because correct me if I'm wrong, but I think what you're seeking clarification on is whether this total, if you netted out the total, I haven't done the math, but I assume the 12.7 is the total cost of the entire kind of cost column here. I think your question is that like the bottom line unaffected kind of plant addition impact sought for recovery, inclusion in rate base in this proceeding? And I think it's similar to the question I was asking as a briefing prompt, because if you look at like a traditional B schedule, you've got utility plant, then you subtract accumulated depreciation, it gets you down to net plant, but then kind of lower down on the schedule, you net out things like contribution to native construction, which, as we discussed, is probably where developer costs would go. I say all that to clarify, like, I think I think it's a tricky kind of question, because if you're asking if it's sought for inclusion as plant, like you could be referring to that top line before before anything is kind of backed out of it. But I guess I'll just ask if you agree, is my briefing prompt question like capturing the same question you're asking?
I believe it would, and I forgot about that. So I think you're exactly right. And I think, yeah, I think we're all set. And that was my last question. So thank you very much.
Okay, that's all for authority staff. OCC, I saw that you reserved the right. Is there a cross for this panel? Yes, I'm getting a thumbs up from Attorney Minikowski. So we'll move on to OCC, unless Mr. Attorney Bogan.
Yeah, might I suggest we take a short break?
Sure, let's take a 10-minute break. We'll come back at 11:45. 11-minute break, 11:45. All right, we are back. I hear a rumor that OCC has approximately 30 minutes-ish. And then I think the bench has a couple of questions, so we'll target trying to take a lunch by 12:30, but nope, no pressure. Go ahead, Mr. Sobolewski.
Thank you, Chairman Will. Good morning, Commissioners. Good morning, Company. Richard Sobolewski for the Office of Consumer Counsel. First off, a couple follow-up questions. Mr. Capozzi had asked some questions about approvals of bids and change orders. Mr. Sherwood, you said that you approve the bids. Is there any Board of Directors approval involvement in approval of capital projects?
The Board of Directors approves the initial capital plan for the year, and in that plan would be some WICA projects or non-WICA projects that the company would be proposing to do for the year.
So they approve the capital budget, but they don't necessarily get involved in approving the bids.
Correct.
Yeah, there were some questions this morning on Rye Hill. Are the revenues, expenses, plant investment, et cetera, included in Hazardville Water Company's annual report that they filed with Pura?
Which is included? I'm sorry. What are you asking? Rye Hill?
It's Rye Hill, the revenues and all that data, the revenues, expenses, plant investment.
We'll look at the application and get back with a read-in.
Well, I'm looking for the annual report, not for the application.
No, I understand.
So that'd be a read-in on whether the annual report captures all Rye Hill costs and revenues?
Correct. And if it's separated out, I know sometimes when we have companies with multiple systems, they split out by system some of that data. If that's the case, could you also indicate that, please?
Okay, so I have that as, does the annual report capture all Rye Hill costs and revenues? And if so, is it broken out from other components on the system?
Thank you. Looking at your decision from the last rate case, would you agree, subject to check, that the merchandising and jobbing income from as performed by the company is credited as an offset to revenue requirements?
Yes.
I'm sorry to interrupt, Mr. Sobolewski. I forgot to say out loud the name, that last read-in is F. I forgot to say that on the record. Sorry, Mr. Sobolewski, go ahead.
No problem, thank you. Okay. In regards to Schedule C dash, I think it's 3.A and it's in lay file 1. This morning, there was some discussion about the water supply plan costs. Would you agree that the goal of what you're requesting is to collect the level of expense the company spent since its last rate case on its water supply plan and required updates?
Yes.
So if there were expenses that were allowed to be recovered in the last rate case and you amortize those, you're not asking for those again?
No, we're not.
Okay, most of my questions are going to be related to lay file 23. Which is a breakdown of all those deferred expenses. Just going to try to go through these sort of quickly. Okay, the ROE study, first item. Am I correct that this relates to the Pura docket on generic ROE, subject to check, would you agree that small water companies, and by those I mean the Class A non-Connecticut water or Aquarian water companies, which Hazardville was one of them, work together, and there was some shared witness and legal expenses, and that's what those are?
Yes,
And that group of companies, they worked together with the OCC, and there was a settlement that was presented and approved. Is that correct?
I believe so, yes.
And that's the formula that was been talked about in this case for ROE.
I believe so, yes.
And what you're requesting for is the share of expenses that Hazardville was responsible for.
Correct.
Okay, on the deferred Avery diversion permit, it says 2020 there. Subject to check in the last rate case, and I think it's the schedule that was talked about this morning that was in the extra evidence that was included in the record by Pura. I think it was scheduled G-22. In the last rate case, there were diversion permit expenses that were allowed, and it was a 10-year amortization. Does that sound right?
Yes.
Okay. Now these expenses, how often does the company is required to do diversion permits?
I'm not sure on that.
Would you agree it's something 10, 20, 30 years?
It appears to be around every 10 years.
Okay. Do you know if this Avery diversion permit, was that a renewal or was that an initial?
I believe that was a renewal for the original one from back in 2010 or whatever. It included the level A mapping and such.
Okay. The next item, the parent company restructuring. Is this the total cost or were portions charged to Hewitt City and the other operating entities?
I believe so, but I'd have to verify.
I'd like to ask for that as a read, and if portions were charged to other entities, and if it's possible to find out what those were, that would be appreciated.
Sure, that'll be read in G, and the question is whether portions of the parent company restructuring were allocated to other entities, and if so, what proportion?
Does Avery own all the shares of Hazardville Water Company?
Yes,
So Hazardville Water Company and Avery they're private companies, they're not publicly traded, is that correct?
correct.
And this change to the parent company, was that a choice of Avery doing, or was that something that Pure required, or something that Hazardville Water wanted?
It's a pure requirement.
When you say it was a Pure requirement, it was a requirement because there was a change at the parent company?
Yes,
The change to the parent company, though, wasn't required by Pura. That was something that the parent chose to do.
Correct.
Regards to the EPA, risk and resiliency assessment. Is that a one-time study? Or is there some schedule where that's seen as a recurring requirement where you're going to need to do renewals on a regular basis?
It was an initial, and there are requirements to renew it on I believe it's a 5-year basis. It's up for renewal next year.
Oh, okay. Thank you. Regards to the Summers tank replacement, has that tank been eliminated?
At this time, no.
Were there system improvements completed as a result of that study?
A partial, there was the Wicca project that was done on Taylor Road to increase the main size from Taylor Road to Route 190. That would then complement the addition from the Taylor Road, Hazard Avenue to the station piece.
But at this point, the tank is still needed?
Correct.
With the new tank project has been discussed in this proceeding, is this tank still going to be needed?
Once the tank is completed, the new tank is completed, and then the system improvement from Taylor Road, 190 Hazard Avenue to these fucking to the Summers booster station, the Summers tank will be taken out of service.
So that's somewhere 5 years down the road or so.
Yes, correct.
Okay, onto the water supply plan. There's 3 items there. I know the water supply plan used to have to be updated every 5 years or so. Is that still the case?
No,
So you don't foresee there's at least no regular schedule for another water supply plan update. Is that correct?
that's correct. The company will be notified by the Department of Public Health when their next water supply plan updates are required.
I know there was some discussion this morning with Pura staff about if you ever received final approval from the DPH on various editions of the water supply plan.
Correct.
Is it possible that's, if you were ordered by Pura to get as a compliance report to get at least filings to say what the status is? Is that something that could be accomplished in the next couple of months?
It potentially could be accomplished. You'd have to contact Department of Public Health to get some information from them regarding the water supply plan in 07, 2010 and such.
The engineering study there, the next one. For South Road Apartments.
Yes,
Was that study paid for by the customer? Or the potential customer?
there was a partial payment by the developer or potential customer.
So the amount that's shown here is the amount that the company paid for, or a portion of that was paid for by?
That's the total amount, I believe. I believe the potential customer paid approximately $3,500 for the study.
Okay. So what's left to be recovered from customers is less, maybe 720 or so?
Correct.
All right. In regards to the storm expense, does that include in-house labor?
Yes,
The amount you're requesting includes in-house labor.
correct.
When I was, we can just go back to the water supply plan. When I went through some of those detailed invoices, and I think they were just off your accounting system. It appeared there were also some internal label, internal payroll for that as well. Is that correct?
Subject to check, yes.
Okay, the tax accounting change, there's one with CWC there. Is it correct that CWC did some work for Hazardville Water and assisted them in analyzing the issue and possibly even helped in responding to discovery and their work either in that docket or in responding to discovery and WICA or in other cases regarding the tax accounting change?
I believe you may be correct.
The Bucking tank rehabilitation, that was, did that result in repairs to that tank?
Yes, there were small repairs made to the interior of the tank.
The the next one, there's a Bucking tank replacement design. Is that tank in the process of being replaced?
That's design, that study was done to determine the replacement for those two, for the two tanks, including the one that was repaired.
Okay, so that doesn't relate to a new project.
The replacement design, no, it does. It's related to the replacement of the bucket storage tanks, which will be coming up in the next couple of years.
My question is, why shouldn't that be capitalized along with the cost of the new tank?
You're doing it in the late bond, right?
Well, we've removed those two from the LFE one
Okay,
because the project's not complete.
okay, thanks. For the Skidco wells, were any repairs required for that after that inspection?
It was determined that the contamination potentially came from a monitoring well located next to the well. So the monitoring well was sealed.
In regard to the deferred sales tax, For those expenses, are you aware that Pura had issued a letter on October 2nd, 2015, allowing the deferral?
No, I was not aware of that.
Okay, were you aware that Connecticut Water, in both their 2020 rate case and their 2023 rate case, were allowed 6-year amortizations of those expenses?
No, I was not aware.
I have a question on backflow services. I think it's in lay file 53. I think. Can you explain to me how that type of work is done? And are those revenues a monthly fee, or is it specific, service calls that your employees make?
Backflow testing is conducted annually as part of a Department of Public Health requirement. The company is required to test or have backflows within our system tested on an annual basis. The customers are typically notified that their testing is needed to be done for the year. The customer has the option of having company test the device or an outside contractor test the device and provide the company with those test results to prove that the device was tested in accordance with Department of Public Health requirements. Again, it's annual. It's not, then I forgot what the other part of your question was.
But it's the same customers that are,
Typically, it's the same customers every year. If there's any new ones, they're included on the list. The company has now also looking at lawn irrigation systems, which are required. And this is where I believe that customer that spoke at the public hearing, he was probably an irrigation system customer, that once their irrigation systems are activated, they get an annual letter irregardless. If they don't activate their system, they usually let us know that it's not active. If they activate it, they can have us test the device or their sprinkler contractor test the device.
okay, thank you. This is kind of a general question. I know for this case, there was no cost of service study done. Has there ever been a cost of service study done for Hazardville Water?
Not to my knowledge, no.
I think it's late file 50, talks about Grant Road and PFAS.
Yes.
Seems like, is that the one test that hasn't been done?
That well's been offline for a number of years. At the time when we were testing for PFAS, we decided not to test for it at the time. As we explore reactivating that well, it would have to be tested for PFAS, and it'll have to be tested whether we activate that well in short term. The PFAS test will need to be done within the next few years.
So now it's sort of like a backup supply or emergency supply.
It's a small well, so the need for it is not an emergency basis or anything, so.
In this application, and a lot of these costs were thrown into that same schedule. In your next rate case, would it be possible for you to break out in a separate schedule, both your tank maintenance, if there's any painting expense, and put it in that schedule rather than putting it together like it was here, as well as wells? I know other companies often do a separate schedule to keep those separate. Is that something the company can do the next rate case?
We could look into it.
Can you just repeat what you're looking to break out, please?
Tank maintenance and repairs, tank painting, and well maintenance.
Thank you.
And that's all I have for these topics.
That's it for RCC then? Okay, thank you. I have a couple of questions and then maybe other commissioners might have some. I'm gonna start my question with a monologue. I'll try to keep it brief. So we, as the panel may be aware, the last several rate cases at Pura, sort of a topic of great discussion has been the issue of plant documentation. And this sort of dates back, as my recollection, to 2007-01, the last Aquarian rate case. It's come up in the last two, I think, Connecticut water rate cases and every other rate case. And, you know, the issue is, from my perspective, that we as regulators are tasked with answering the question for ratepayers, like, are these investments that a regulated company is making prudent? Are they, do we need these things? And are there cost controls? That's the sort of simplest way that I think of it. And I personally acknowledge, you know, there's a necessary balance between, you know, like we can't, Mr. Capozzi was asking a lot of questions about internal documentation that's sort of preserved by the company in the process of evaluating bids. I'm sure, I know that there's continuous documentation as like a project continues to be built. We sort of can't run the business for a business, so we can't, you know, there's got to be some balance between the kind of level of documentation that's provided and what's sort of possible to evaluate. And I don't, you know, I don't know what the answer to that question is, but I'll get to my question finally. I was looking at LFE 20, and the prompt for that late file was to provide support showing that the Cooper Street project was evaluated for cost controls. And I saw, you know, that the bid documentation was provided and the map, Mr. Sherwood, as you spoke to. But what was missing for me, at least, was some sort of narrative, sort of assuring us that how this bid was evaluated. And I have to say, your testimony in your conversation with Mr. Capozzi was helpful. It was helpful to hear about sort of the standards that the company applies to the evaluation of bids, both sole sourced and not. And I also appreciate that in late file 16/RRU 67, that project description kind of column is helpful for us, I think, to kind of get a sense of why projects were kind of put into service or the thinking behind it. Anyway, that was a lot of, I tried to meander as little as possible. Finally, at the question, can you give us any guidance either here or in the brief as to kind of what else we can be looking for in the record to help us answer this question for ourselves of whether these projects, not the WICA projects, which have already been evaluated by PURA, but the non-WICA projects were necessary and that they provide benefits and that there were cost controls applied as they were being put into service.
I'll refer to Mr. Bogan for, be a brief, put it in a brief. I mean, I probably can answer some of that.
We can do it one of two ways. If you want to offer a preview now, you can. Otherwise, we can certainly put it in the brief. I mean, I certainly appreciate and share the chair's concern because at the end of the day, only prudently incurred costs should be recoverable. So we can certainly provide an explanation in the brief as to what the company considers and does in order to ensure that costs are minimized. But I don't know if you want to offer anything now.
No, I believe I understand his question too, is to help them, to assist them to what sort of documentation may be required further into future events. So I would prefer to be able to think on that a little bit. And then maybe put in a brief instead of offering. I do have some thoughts on that. So, but I would like to think about it a little further instead of just off the cuff.
Sure, that works for me at least. And just one follow-up, Mr. Capozzi was asking questions about documentation that's sort of evaluated during the bidding process. And I thought in late file 21, which is specific to sole source projects, it references careful documentation. I'm wondering if, in addition to what might be addressed in the brief, as a supplement, subject to the objection from anyone who doesn't have the opportunity to cross on it, if the company could provide examples for maybe like 3 projects of the kinds of documentation you were talking about, to the extent that they aren't already in the record, and if they are, I'm sure that would be addressed in the briefing prompt. Do you think that's possible?
Yes, I think the documentation for our WICA projects in that sense of bid notice, notice to proceed, notice to award, things like that could certainly be supplied.
Thanks. Yeah, and we're, I think again, I feel like we have to sort of connect the dots between your testimony talking about sort of what it is that the company is considering while it's viewing the documentation. It's just really helpful to us to sort of see what it is that you're looking at when you're kind of implementing those processes. So to whatever extent you could help us with that, that would be.
And I believe one of the biggest things is in looking at what I believe I answered a question, might have been an RU, but I gave an exhibit to bid tabulation for one of our WICA projects, which had all the contractors in it for that bid. So you can kind of see what they're doing. When it's not always necessarily the bottom line. Some contractors, unfortunately, will price removal of ledge for $1. And I know they're going to come back after me with a change order because they're not going to remove ledge for $1. But they'll put that in the bid to be low bid. And I have to look at those very carefully in knowing what they potentially may run into. If they're not going to run into, if I don't think or feel that they're going to run into something like that, then I can look at that and say, okay, that's fine. But if I know the conditions that they may run into, that's not going to be sufficient for a bid. So stuff like that is what we look at.
Thank you. I think that's my last question, so I'll pass it to any other commissioners Commissioner Beecher.
This might be a bit redundant, but just building on the chairman's question, I think first of all, I'd like to add used and useful to prudence. We're looking for both. And then project by project documentation, or not exclusively that, but an overall sense of internal processes and controls used to make these decisions. And that could include, yeah, just, what you do to provide that assurance. And what do you do in the course of the business in terms of audits, and documentation. So I'm kind of looking at it at a managerial level as well. So to the extent that you could speak to that would be really helpful, because there are lots and lots and lots of projects. And so getting the big picture to me, is really about getting a sense of the managerial controls in place on an ongoing basis, if that's helpful to frame the discussion.
I would put this in the category of softball questions designed to help the company. I don't want to get into oral arguments, but certainly as a small company, cost is ever present as a concern. So we can certainly address the philosophy that the company engages in when it undertakes capital projects in order to ensure that costs are minimized and projects are justified.
On behalf of ratepayers.
Yes.
Thank you.
All right. No other questions from the bench. It's 12:22. We can go 8 minutes earlier than I anticipated. So let's come back at 1:15 after our lunch break. And I did hear, I think we have some general updates that the cross estimates for the O&M panel are going to be for both OCC and Pura staff less than reflected there. So just throwing that out there for planning purposes. Thanks. All right, and I know Commissioner Beecher's on our way down as we speak, but are there any, Cheeseman, thank you. Are there any administrative matters before we get back to Ross?
Nothing at this time.
Okay. Thank you. Mr. Norton, are you ready to go?
Ready to go if you can hear me.
All right.
All right. Good afternoon, Chairman, Vice Chair, and Commissioners. Just have a few questions to the company's responses to the late files as it relates to some cost of capital items. And sorry if some of these are a little bit repetitive. Just going through some of the late file responses with some of the prior hearing testimony. I just have some gaps that I'm still trying to clear. So on the cost of debt, I want to refer to LFE 24, if I could, which effectively lays out, revises the response to RRU 149. And my question on this revision that the company provided, the exhibit of the response specifically, is there any calculation within this response that supports the company's updated total embedded cost of debt of 2.3% as you originally provided?
We updated the schedule, but we didn't update the workbook with this.
The what was that? Sorry.
We didn't update the LFE one workbook with this, but this shows the effective interest rate.
Or maybe more accurately, the variable floating interest rate portion, is that right?
Is that? Yes. Out 2% plus the floating. It's the effective interest rate, which is the 2% plus the what is it? Floating, the LIBOR floating. The LIBOR floating rate.
Okay, thank you. At least on the topic of from the original evidentiary hearing on the 2.3% overall embedded cost of debt for long-term debt, I'm just wondering, just for the record, how you guys originally actually came to that calculation, the 2.3%, just in detail, specifically what you took to do that. Well, I don't think it's in the filing to your answer. I think your answer had said that it isn't in there, but in the evidentiary hearing, I believe it was read in N, the company, you responded and provided an updated embedded cost of debt for all your long-term debt financings of 2.3%. Is that right?
Yes, we had adjusted that schedule because it initially encompassed the whole year instead of just through July. It should have only been through July 31st, so we updated that. And what LFE was that, or what was what you're referencing in what interrogatory?
I have read in N from the
Yeah.
last case. It was provide calculation of cost of long-term debt of 3.96% referenced in testimony and whether it is reflected in D10 and which value is being sought as part of the weighted average cost of capital. And the response, according to my notes to that read-in, was an acknowledgement that would be an adjustment in LFE 1.
Right. So I guess maybe the question would be, where would that be in LFE 1 supporting the revised.
I don't, what they're asking is about 3.9%. Oh, that's the interest rate. Right. I remember in something and 6%. That's what they're referencing. But I don't, not saying 6. I don't know where that is though. I don't know where in the workbook that is. Do you know where in the workbook you're referencing?
I mean, I think specifically it would show up or should, I guess the Schedule D-1.0 doesn't necessarily get the calculation of the embedded cost of debt, more so it just shows the interest rates by loan financing, I believe. I guess really what I'm trying to understand is the methodology that specifically the inputs that were used to calculate the response that the company had to read in N in the past evidentiary hearing, which I believe was 2.3%, was the embedded cost of debt that the company answered.
6%. I don't know if we changed it, where. 7%. How we changed. Still 3.76%. Oh, but we were supposed to. That number has not been changed. I guess I'm not understanding what exactly you're looking for in this. Because nothing was changed there. Was it?
Mr. Norton, can we go back to your basic question? I think you asked, how did you get the 2.3%?
Right.
So why don't we start with that?
I know. It's on and it's on and a read and I need to see the list. Oh, is this? We put them on paper. As he's referencing a read-in, we were listing them. Okay. I'll have to come back to that.
Okay, maybe a read-in potentially on that one.
Sure, that would be read in H. And I guess is the prompt to, well, yeah, what would you say
yeah.
the prompt is?
I guess it's an explanation of the inputs that the company used to calculate the 2.3% embedded cost of debt as supplied in.
I found it.
Okay.
Finally. So we took the outstanding base amount as of August 1st, calculated the 3.7% interest rate times 7 months to get our interest cost. Same thing with amortization, took the amortization, monthly amortization times 7 months. Get our total cost. Those two amounts, and then calculate the percentage of total debt um, by the debt, and then we take the total cost divided by the carrying value, get our total.
And you said that was off of 7 months,
Yes.
and that got you the 2.3%?
Yes.
Okay. And that was also for, you said as of August, was it 7 months ending August of this year?
Well, 7 months at July 31st, 7 months as of 8/1. So yes, of 25.
Okay. So why did the company go with 7 months originally? Was that?
We didn't, we actually had it for the full year, but then we had to go back and adjust it because it looked high. So we went back and saw that we'd used a full year instead of the 7 months.
Okay.
So the initial calculation of the interest expense was over a 12-month period, while the outstanding face amount of debt was only for 7 months. Therefore, the embedded cost of long-term debt was overstated. So we adjusted the interest expense to
Okay.
be the 7 months along with the the face amount of
I see,
7
I
months.
see.
And then, so
So if we were to adjust for the pro forma rate year, I know the company has provided some updated responses for interest expense in the updated LFE one, or maybe more specifically, might have been LFE 38, actually. We don't need to go there, but the company provided some updates to the interest expense for some recent changes, I believe, just to get it up to date, I think in LFE 38, which I think more accurately reflect the pro forma year, but might not quite get us there. But if we were to get the total interest the company is expecting off of that filing, and ultimately dividing that over, the overall carrying value of long-term debt expected, the average carrying value expected for the pro forma year as well, we could effectively get, more of a pro forma year picture of your embedded cost of debt. Is that, you following that?
yes, because it's only through 7 months, right? So you're saying,
Well, the interest you are putting forth in your update, I think to LFE 38 should be for the pro forma year, correct? So that should be 12 months, I would think. Try to pull
The
up
actual.
38.
Yeah, we have actuals, yeah.
Right, yeah, I think using amortization tables off of that, that's right. So my question, I guess, then is if we were to take that interest, those interest expense values, and divide them by, the expected pro forma year, carrying value of all your long-term debt, that should be a pretty accurate picture of your overall embedded cost of debt, no?
Yes.
Thank you.
Sorry, Mr. Norton, just to interrupt, I'm going to, just for the record, I'm undoing read in G.
Okay.
I think it was H.
Oh, that's right.
Yep, I must have already undone it in my notes. Thank you.
believe the company previously indicated that when, and I'm speaking on the interest rate swap agreement here that we've kind of been discussing. The company previously indicated that when the floating rate or the 2% plus LIBOR, as we said, when it rises, it pays the floating rate to the bank, but then it receives back is it the difference between the variable floating rate and the 3.76%?
Correct, yes.
Okay. If that's the case, then could you just explain what's the actual benefit or purpose of the swap agreement to begin with? If you're outlaying the interest to the bank on the spread and then just receiving it back.
Well, we're paying the full variable rate to the bank, and then the bank gives us back the difference between the 3.76 and the actual rate. So we don't have to pay the interest rate. You know, we're fixed at 3.76 in that respect. So, and interest rates have gotten substantially higher since we entered into the agreement. So that's why, because we get that difference.
Okay. But you're paying I think the current based on, I think LFE 24, there's a tab in there, it's actually RRU 145 that I think you dropped in there. But that gives kind of a history of what the floating rate has looked like since I think you closed on this financing. And so I think it's right around, like, more recently closer to 6.5%, right?
Correct.
And so you're saying you're paying 6.5% of interest to the bank, right? Like today, obviously it's a changing rate, but you're approximately paying that today. And then you're receiving back the spread between that 6.5% and the 3.76%
Correct.
as an interest earned,
Yes.
which effectively brings you back to the 3.76. So what's the difference between having the interest rate swap agreement and just a fixed loan at 3.76%?
Well, I don't think, I was not here when this was
Okay.
put together, but if they didn't have if variable rate was the only option, I really can't answer the thought process behind that. I don't know what was the interest rates were at that point, or, it would have only been done if it was in the best interest, to do, and Pure approved it, and attorneys and the accountants, so I'm probably wouldn't get so we don't, it's variable. I'm guessing I shouldn't guess, so. that's my answer.
Okay, thank you for that. So then, based on what you just said, it to me sounds like it's pretty clear that there's at least on the CapEx loan with the swap together, you should be fairly close to the 3.76
Correct.
and cost of debt on that loan. Okay.
Yes, I did ask the bank to give me something that showed that, but they're working on it, so I don't have anything at this point.
Yeah, I just wanted to be clear on that, just knowing the variable aspect and ensuring that, that cost of debt isn't dropping below 3.7
No, it's not.
by any means.
Nope.
Okay. From the company's perspective, is the swap agreement acting in any way as a hedge against rising rates?
Yes. I mean,
How so, considering what you just said?
because we're fixed at 3.76%. When it goes over that, we benefit from it. So rising rates, it would keep us at a flat, so we don't have to pay the higher rates. So I guess,
But there's a fixed portion of the loan, right? It's already set at 3.76, and I might be talking in circles here. I'm just, yeah, I don't see the whole purpose of the swap agreement, but I think you've already shared that it's kind of,
well, we did submit the swap agreement, so I would assume that would explain exactly details on the swap.
okay. Does the company, or could the interest rate swap agreement be characterized as a derivative financial instrument?
I would have to check that. I believe so, but I'm.
Do you want that as a read-in, Mr. Norton?
Sure, that works.
All right, that'll be read-in H, and it's just, is the swap agreement a derivative agreement?
Yep. Just a curious question, and you might have submitted a filing like this in the original application, but it just kind of jumped out to me in LFE 24. There's a tab in there, Exhibit I. I'm just curious, could you walk me through the methodology that the company is using here to come up with the return on equity values? Maybe as another question, are you backing into these estimated ROEs based on different capital structure scenarios? It's Exhibit I, again, if you need it. I'm looking mainly at row 47, where you calculate some negative return on equity values.
Are you referring to Exhibit I in the workbook?
That's right, yep. LFE, yeah, LFE 24, and there's a tab in there, Exhibit I, ROE 2024, Q4. It's the second to last tab in Excel.
Okay.
Mr. Norton, just so I'm following along, are you asking about the
About the negative.
row 47?
Yep.
Okay.
What are we doing? Can you repeat the question?
Yes, I'm just curious, the company's methodology and its calculations here. The main question is,
Mhm.
are you calculating I see you're calculating the return on rate base, backing out weighted average cost of debt on row 45. And then it looks like you're just backing into what the return on equity would have been based on different
Yeah, that's what we were doing, right?
based on different
Yes, we
capital-
were asked to do that, yes.
Okay.
I have a follow-up question. I think I get it though. So like looking at row 47, column E, the negative 4.19% return on equity, what that's saying is that using the actual capital structure for the 24 calendar year, that would reduce the return on equity by 4.19%. Is that what that means?
Isn't that the return on equity? Isn't that considered the return?
Because the calculation, if you total.
Yes, it would.
Okay.
6 divided by 27, so it's a negative divided by a positive, so that makes it a negative.
I guess
I understand that. I'm just.
I'm a little curious why the weighted average cost of debt was inputted negative there, just in the buildup of this calculation. That was inadvertent or supposed to be that way.
No, I don't think that's supposed to be this minus this, right? Shouldn't that be? It's should be net of that. This is adding. So yeah, it should be minus this. But it's adding them and making it a negative. Right, this should have been this plus this, right? That's what it should be, right?
This was the calculation wrong, because it's taken a negative.
Yeah, I think it's the calculation.
You know, we never think-
I believe that the calculation was in there from previous worksheets, and it looks like it should have been net of the 9.6 and the 4 negative, so it should be 5.41, but the formula added them as a negative. It's just the way the formula was. It's a formula error.
Okay. Is the error on row 45 for the weighted average?
No,
cost?
it's 51
Okay,
because it takes a positive of the negative 419 minus the 9.6. So it made it a negative and added them. It was just, and because we don't
I see.
normally have a negative, it doesn't usually happen that way, but
So
it was a formula thing that we didn't catch.
yeah, so it should be more like you said 5.41%.
Yeah, if you take 5.41%, yes.
Okay. Okay, thank you. I'm gonna jump to LFE 26.
Okay.
This is, yeah, the table with the updated, updated balances that we had requested for, the expected loan balances provided by the company for the pro forma year. Are these, the average carrying balances for each loan for the 12-month pro forma year, or are they expected balances at a certain point?
Those are the actual loan balances.
Do you have the, as of which date those would be?
25. 12/31/25, as of 12/31/25, those are the expected loan balances.
Okay.
Well, that says 12/31, what's that? No, but when's the, so it's a full 12 months of pro forma. So
Okay.
it would be 12/31/26 would be
A
the
calendar year 2026 average balance?
actual ending balance, yes.
But the average for the pro forma year? Or
It's
as
the
of the end?
actual, as of 12/31/26, those are the expected loan balances based on the amortization schedules that we have.
Okay, all right. I think we have on record as of 2025 already in Schedule D 1.0. So if we were to, it's not going to be exact, obviously, because the amortization doesn't work that way and how much principal is getting paid down, but an average of the two would be pretty close for a carrying value for the pro forma year. Wouldn't be exact, but
The average of what, 22 years?
the ending
25?
balance of 2025 and the ending balance you provided here, which you said was
20.
2026, right?
Yes.
Okay.
April.
But I did 12 months.
Okay.
I'm gonna move on to in reference to LFE 27, but I might reference LFE 1 a little bit here as well. In LFE 27, the company's response indicates that the common equity balance was updated in the LFE 1 response. Is that correct?
Yes,
And the new balance at the beginning of the pro forma rate year as shown in LFE 1, Schedule D-1.0 is now approximately 6,767,000. Is that right?
can you repeat that number?
6,767,000 and change.
Correct, yes.
Was there any assumption made for the first 3 months of 2026 to get to the updated equity balance of that figure? Or is this just at the end of 2025 as well?
This number is as of, that's 3 months worth, that's is as of.
The number is as of April 1st or 3/31,
Oh, okay.
26.
So there was no, it doesn't look like there was, would that adjustment for those, for that time period to get you to April 1st be included in the, I think it's, if you're looking at LFE 1, scheduled D-1.0, it's on row 33, the net income line. Looks like a negative 13,526. You know, if it'd be included in there?
We'll have to do a read-in.
So I guess our read-in for confirming whether the 6,767,000 common equity balance includes, or the 3-month adjustment to get us to April, the pro forma, beginning of the pro forma year was adjusted and included in the
Can you guys find that out?
Schedule D.
Okay, that'll be read in I. I'm a little confused because I thought the question was comparing LFE 27 to Schedule D1, right? So I thought your question was whether the 7.639 million is in D1, but maybe I'm
I
misunderstanding.
think the LFE 27, that number was, and I'd have to pull it up real quick. I think that was at the end of the pro forma year, so that, and the company can correct me if I'm wrong. I think that was the end of pro forma year to be inclusive of any net income that is expected for the pro forma year, but, and the number I'm referencing would be trying to get to the beginning of the pro forma year without any of that additional net income for the rate year.
Okay. So it's confirmed whether the 6.767 million common equity balance and is, you just want to know how that's calculated?
Is inclusive of a 3-month adjustment, because based on the way Schedule D is showing it, it looks like it's just adjusting to get to the end of calendar year 2025, so.
Okay.
Yeah, just a confirmation on that. that it's truly as of April 1st, estimated balance April 1st, 2026.
Gotcha. Okay,
Okay.
that's Rita and I.
Okay, I'm gonna move on to a couple last questions, and refer to LFE 28. And the company's response to LFE 28, the company cites to proactive asset management as an area of exemplary management performance. The company stated that it has, quote, reduced outages beyond industry standards, close quote. My question is there any industry metric that the company was tracking against when it made that statement? And if so, how did the company compare to the industry average?
No, there was no industry matrix that was used to make that statement, just the fact that one of the examples, for the redevelopment stuff, but also in the installation of, generators and things to make sure that we're staying operating during any type of outage or event. We also, the WIC assets that we're replacing, make sure we maintain water flow through our distribution system. So we have reduced pipe failure.
Thank you. Similarly, the company cited exemplary performance in resilience planning, noted that it has, quote, drastically cut recovery times, close quote. Are there any metrics for that that are internally tracked?
No, there's really no matrix. It's, I'm going off of experience from the time that we started and prior to doing, again, the generators, SCADA. We reduce time that a station may be down or offline. With the invent of SCADA, we're able to respond quicker, and instead of waiting for a customer call or an answering service or something to tell us they have an issue before we respond to a particular location, we're now able to either look at the situation immediately and then effectively respond quicker.
Thank you. In reference to LFE 29 and 30, and specifically in LFE 30, the company stated that, quote, if the company requires more equity, the dividend payment is lowered or adjusted to complement the company's need, close quote. What specifically does the company consider when deciding how much net income to preserve within its common equity balance versus declaring a dividend?
Good equity. 30.
Or maybe what does the company and the board consider specifically?
Can you repeat the exact question, please?
Yes. So I quoted that in LFE 30, the company indicated if the company requires more equity, the dividend payment is lowered or adjusted to complement the company's need. And my question is, what specifically does the company consider when deciding how much, or the company and the board of directors, what is considered when deciding how much net income to preserve within common equity versus declaring a dividend?
So they base it on projected income for the year and needs for going forward to determine how much they're gonna declare as a dividend. Obviously, the less net income, the lower the dividend. So, and Avery doing decides that. The board-
Solely or,
Well, the board of directors
yeah,
decides what they're going to pay for dividends, declare for dividends.
is the capitalization mix something that the board and the company is looking at and, ensuring that a target capitalization mix is
Yes,
maintained? Okay. Um, And I believe in the responses that was closer to what you're applying for, which is about a 54-ish percent, 55%-ish equity capitalization, right?
close, yes.
Yes.
Okay, that's all my questions.
All right, that's it for authority staff. OCC, do you have any cross for this panel? I'm seeing a no. I don't think deep reserved, but any cross deep? Okay, thank you. So we can transition to the next panel.
Mr. Chairman, while we're doing that, I believe Ms. Wright has the information requested for read-in H.
Okay,
So that was about the net income for pro forma. So the loss of 13,526 is anticipated 2025 year end. And we are not expecting to have any income in the first 3 months of 26 because the rates won't be increased at that point, until that point. So that's why there's no net income for the first quarter of 26 in here.
So I'm not sure that's what I had for H.
I was about to say, I think I had that as I.
Oh, I'm
H.
sorry. I
Okay.
apologize. I looked at the wrong.
So that'll satisfy. And just for the record, I was confirm whether the 6.76 million equity
Oh,
balance.
sorry, yes.
So that was the response to that question, correct? Okay,
Sorry, yeah.
that's okay. That satisfies I. Thank you. So if authority staff is ready to move on to the allowable expenses cross, or do we?
Not having cross, Chairman.
Okay, I thought I had heard that. So confirming that OCC, you reserved 2 hours, but I also heard that might have been there might be an amendment to that. Okay, but you do have cross. Okay, so we'll move on to cross from the OCC for expenses.
Good afternoon. I'm Albert Sablowski for OCC. And first, I would just like to follow up on just the recent cross on late file 30. And the company here was asked how Avery Doing has assisted in raising equity capital in the past 20 years. And the company's response was that if the company required more equity, the dividend payment is then lowered. Is this the only avenue Avery Doing has for assisting the company in raising equity capital?
Avery Doing is, they help raise capital because they take all the companies in order to acquire, if we're looking for funding or something, they help us get that with being like guaranteeing.
Okay. Thank you. That does make sense to me. Okay. If we could move to late file 18, please. Okay, in the response, the company stated that this account 391, encompasses office furniture and fixtures, radio frequency transmitters, handheld meter read devices, and MIU and computer upgrades. The company here was asked to explain the increases. I did the year-over-year change and arrived at the following increases. 26.8 thousand from 2020 to 2021, 22.3 thousand from 21 to 22, and 40.5 thousand from 22 to 23. Now, when I average these out, I get about 29.9 thousand per year. In the same response, the company points us to Schedule F 1.0 for its capital plan, which I believe models the spend for this account at about 52,000 per year from 2025 through 2029. In the company's historical data, does this account increase every year?
Yes.
Okay. How did the company arrive at the 52,000 number, seeing that the average increase in the company's application that I just calculated out was a bit under 30,000?
Trying to understand your original question.
Okay. I mean, I can rephrase. The last few years of increases were under 30,000 if I average them out. And in the company's capital plan, I see 52,000. I'm trying to see how the company came up with that number, or if I'm looking at it incorrectly.
The company, we make adjust, this again, this is not a capital plan. This is a budgeting plan. This is not the capital plan. So this is for budgeting purposes only. So we try to make adjustments for the calendar year that the board is going to be approving on. As we've testified earlier, that these numbers in this purchasing of radios was not 42,000 and ended up being, for the total for 2025, ended up being somewhere around 51,000, I believe, or subject to check on that. So that number wasn't even good. That was 42,000 basically as a guesstimate, which was not a good number based on what we purchased for new radios and stuff. Computer upgrades, the same thing. We ended up with more in 2025 so far for computer upgrades than we had originally planned. Going into 26, 27, these numbers will be adjusted accordingly to either hold if we didn't spend some money the previous year, or increase if we spent money the previous year. They'll be adjusted up or down. That's why that number going all the way across the line is flat. It changes every year. It's really just a placehold. Occasionally, I will adjust the years out in 3, 4 year, 5 year out a percentage. But for the most part, I look back at the previous year, what we spent, and make my adjustment to the plan that will be approved by the board for the following year.
If you look at the application that you filed, this tab F-1.0 is titled Capital Plan.
I understand.
And the sheet itself also says 5-year capital plan. So maybe that's where my source of confusion.
Right, and I believe that you asked for a late file regarding I believe it was yourself, regarding the costs of 2025 percentage completed. May not have been you, but we went through that earlier today. And again, it's a budgeting, it's not a, if you read the top of that plan, it says budget plan. It's not a capital plan.
Thank you. If we could turn then to late file 29, please. And this is regarding profit sharing and bonuses. And so the table here shows dividends declared and the company's net income in a table. I mean, it's a silly question, but just to be sure, the numbers reported in this table, the net income number here is prior to the dividend distribution, correct?
Correct.
Thank you. And when are the bonuses for management typically paid out?
Did you say when?
Yes, like what time of the year?
Usually like around Q2 of the following year.
So is it the company's expectation to pay out the 2025 management bonuses at this time?
Don't have that information at this time. There's been no discussion.
Thank you. If we could turn to late file 40, please. The attachment. This is those cash balances per account per financial institution. Okay. So for 2024, I think I see 3 negative values for M&T Bank. There are approximately negative 27,000 in January, negative 115,000 in April, negative 177,000 in July. Can you just explain those to me?
That would just be our book balance at the end of those months.
Okay. And I also see a negative $500,000 in November 2023, and that's the same?
$500,000.
Yes.
Okay. In 2023, I see, I'm guessing, it's sort of hard to see without the transactions, a shift from money market to treasury bills. Is that correct?
23. Yes.
Okay. And second. Is that simply due to like a higher interest rate paid? Is why the money moves around generally for?
Yes, if we have a lot of cash sitting in the checking account or whichever account has the higher interest rate, we move it into the money market until we need it so that we earn interest on it.
It's just like a prudent treasury operation.
Yes.
Thank you. Okay, could we go to late file 41, please? And first, I would like to take a look at the lease agreement attachment 2-12. And on page 2, it seems to me that the rent for years 16 through 20 would be just under 5,000 per month. Is that correct?
Just looking here. Yes.
Okay. And if we look at the other attachment, lease attachment 3 through 23, I believe it's also on page 3. Is that 1,640 per month? 1,640?
Correct.
So together, that's about $6,600
Correct.
a month or so. Okay. And these lease agreements, are they from 2009? Or when were those effective, I guess?
Yes, October 2009.
Okay. So they would currently be still in place had you remained at the prior locations, correct?
Oh, there would, yes.
Okay, because there's a 16 to 20-year option. What I'm trying to get at, I guess, is that the $6,600 is the amount that we could be comparing to our current leases should you not have moved.
No, he's correct.
Yes, that's correct.
Thank you. And can you remind me what the cost of the leases immediately post your move to Taylor Road was? I think that was OCC 102, and I think that amount was $9,038, but I just wanted to.
Yes, that's right.
That sounds right? Okay. And just last question on leases, generally, the current one, is that sort of cost-based or is it calculated by price per square foot or in some other manner?
I would have to read the lease and verify that.
Is it possible to get a read-in or a supplement even to this late file, just to figure out how the lease amount was calculated for this particular?
For the current lease
Yeah.
that we have? Okay.
Yes, correct.
Sure, that'll be late file, read-in, J. How is the current monthly lease payment calculated? Is that what you're looking for?
Yes, what the lease,
Under the lease terms?
under the lease terms, yes, thank you. A quick question on those balances from the financial institutions on late file 40. So at any point, are your actual accounts with the bank in the red, or is that just good books?
No, it's just books.
Right, so there isn't any.
Not a bank, no.
Right, thank you.
It's not negative.
And so there wouldn't be any interest or any penalties or anything like that associated with that?
No,
No.
no. And we also have overdraft protection with the money market, so it's all covered.
Okay. And so originally, I think I asked this due to the FDIC insurance limits, which was over $250,000 per account for a typical institution. And were you able to identify any months in here that were over $250,000, so over that insurance limit? Because I'm assuming there's just one account at the M&T Bank, right? You don't have like two checking accounts or?
No, we have one checking and one money market.
Okay.
No,
Then would it be safe to say that anytime you're over $250,000 at M&T Bank, that amount over $250,000 is not FDIC insured?
That would be correct.
Okay, thank you. So. So this spreadsheet then isn't really what's in your account at M&T at a given time, it's your books, right?
I'm sorry, can you repeat that?
Sure. So this spreadsheet isn't really what's in that M&T Bank account at the end of the month, because you said that's booked. That's why there's negative accounts here. That doesn't really help me answer the question of whether these accounts have over $250,000 in them on a monthly basis to see if the company is holding more than $250,000 per account at an institution. Is that fair?
Yes, it's a book balance. So yes, I guess we didn't understand exactly what you were asking.
Okay. Chair, is it possible to get a supplement to this late file? And just to make sure, I would like a monthly cash balance per account, per financial institution to check exactly what I just went through, just to make sure that if there are moments where the company is over 250,000 per account, so that it exceeds the FDIC insurance, I guess.
Okay, same time frame as what the other.
Time frame works. Yep. I do not want it daily, obviously. That would take way too long for everybody involved.
Okay,
Okay.
Sure. I mean, you can, if the company can supplement that, then
Okay.
that works for us. Subject again to any objection from anybody.
Okay. And
what Can you repeat which interrogatory that was?
This was late file 40.
Okay.
And with that, that's all my questions. Thank you.
Anything else from? Okay, thank you. Okay, that brings us, the next panel would be rate design. I'm noting that we got 43 minutes left.
With regard to the lease question, and I believe the 481 lease had been submitted somewhere along this line. The lease is by square foot. It's so much per square foot for office space, so much per square foot for warehouse space.
Thank you so much.
Thanks, that satisfies Rita and Jay.
Yeah.
So we have Deep up next for cross on rate design. That's what I was politely going to not ask, but thank you for answering the question. So yeah, why don't we'll do Deep's cross and see. My expectation is that that's probably when we'll break, given that it's 2:20 and we're breaking at 3. Why don't we take a 5-minute break while we wait for the esteemed Mr. Annis? So we'll take a recess until 2:25. Thanks. Mr. Annis, we just took a recess till 2:25, just so you know. Okay.
Taking this. Need this to. Oh, okay.
But I just asked. Oh, just.
All right, I think it's 2:24, but I think we're all ready, right? All right, go ahead, Mr. Ennis.
Good afternoon. Thank you, guys, and thank you for the 5-minute break, commissioners, chairman. We're going to focus on late file 44, but I don't think we need to bring it up, Laura. I'm not going to be looking at it. Just to start, the late file 44, you proposed a kind of an inclining block rate. But just want to clarify, the first block, the rate you proposed was $5.7485 for the first rate. But I think in late file 1, that has moved to 5.544 per 1,000 gallons. So just want to make sure that was just you hadn't yet updated when you did late file 44 the new baseline rate. Is that correct?
Correct. When we were making all of our adjustments to LFE 1, we had to adjust that. So that's when that happened after with the LFE 1.
Right, and that would presume that
After.
would carry over to 44 as well. So if we make up the adjustments and we adopted the kind of proposed rate you put in LFE 44, you would lower that.
Correct.
And then I assume you'd also lower the $9 by that same movement, which is 74 cents, about 20 cents.
Correct.
Yes.
That'd be correct, yes.
Okay. All right, so I guess in late file 40, you provided the usage for the top 1% and 5%, but only for the few months I had asked for and the few quarters. So can you just for the record go over which months you provided and which quarters you provided in that exhibit? I think it was.
I believe we provided on the top 1% of the monthlies you had for each, you wanted 3 different years. We provided from May through looks like December. Actually October. we tried to keep it the same for the projected higher usage rate of the year. So it was through May through October. And then as I stated before, in the quarterlies, those have a tendency to run a little differently because they overlap in different months. So you have anywhere from you have a read date, you have your starting read date of April into July. So on your quarterlies, you're reading from April through July, and then you have July through October because of that. And then you're going to have, and then we have different groups billings. So we have 3 different groups, 3 different quarters. So those all change depending upon months of the use that the people would be using it. So you have group 3 is May through August, but then you're still going to want to capture September and October. So we gave you from August 15th through to November or to December 15th.
Okay, thank you. So it's about half the year. Is that sound right?
Yeah, it's about half a year.
Okay, and the spreadsheet, you guys are recommending the 10 and the 30. And I'm going to skip units and just use 10 and 30 because I think it's 10 1,000. So it's make sure I get the cubic feet right. But 10 and 30 as the step points for the incline block rate. So it's 10 for the monthly, 30 for the quarterly. Right? That's
correct. That's what our current rate schedule shows. Monthly is 10, is 1,000 or 10, and then quarterlies are 3,000 or 30.
Okay, and I think these cutoff numbers, I guess, unfortunately for my purposes, I think every customer in those months that provided cross over and use ultimately more than more than the 10 and 30. So the monthly are using more than 10,000 cubic feet, and the quarterlies are using more than 30,000 cubic feet. Is that right?
No, it'd be more than 3,000 cubic.
3,000, right? I'm adding an extra
10,000 cubic feet or 1,000 for a monthly and 3,000 for a quarterly.
Sorry. So yeah, sorry.
Or 10 and 30. We'll say with 10 and 30 because that's how we bill it. So that's what we like to say also.
Yeah, so I should have kept my promise and not tried with the units. So, but you agree that all the bills use more than those cutoffs, right?
For this exhibit, yes.
Okay, and do you know what the months that weren't provided, if that's also true there, that for a lot of those months, you're going to cross a good portion of the customers are going to cross those thresholds?
Yeah, you could say there's going to be some other customers besides that are on this that are going to cross that threshold.
Okay, so I guess the reason this is important, I guess, for today is that it's going to violate Commissioner Beecher's kind of imploring us to be revenue neutral, right? Because this is, if we're using more, a lot of the customers are going to cross up, you're going to significantly increase the revenues by not changing the first 10 or 30 units, right? Is that fair to say?
You're going to increase the revenue if you incline the rate to the next step.
Right, without lowering the first block, right? So but you could make it revenue neutral by lowering the first block, so the total revenues are the same, right?
That would be subject to further analysis.
Well, it's just that's just a math question, right? You could, if you have all your bills, you could make it so it's revenue neutral. Just lower the first block, right? Assuming no change in usage.
Hypothetically, you could, yes.
Okay. So I'm going to go back a little bit here. The 10 and 30, you picked $3.16 as the step, correct?
The addition?
Yes.
We chose the current difference between our declining rate is around 55%. So we just flipped that, our proposed rate, and then we adjusted the inclining rate to about 55%.
Okay, so
above what our proposed rate would be.
All right, so you didn't look at Aquarion or Connect Water. You happened to be close.
We had the declining rate. We used the same percentage. We just reversed it.
Okay, all right. So I'm going to try to I'm going to walk through a little bit for the record, kind of a less aggressive step functions. Would it be possible to, instead of having it at 10 and 30, have it at 25 and 75? as the breakpoints?
It could be whatever the break point is set, yes.
Okay, and at that point, we would be crossing where we would have the bills, at least for the months provided. That 25 and 75 would cut off the customers, right? There are customers in all but 1 month that use use less than that cutoff, those breakpoints. If you want to look at those spreadsheets.
Subject to reviewing it really closely, you're probably correct.
But even there, because there's going to be less of a revenue impact if we do that, right? Because now you're just cutting off the customers you have. It's a fairly small number.
Again, it would be subject to an analysis to really determine what that would be. It's usually a given that after any type of rate increase, the customer will conserve water. So there could be more customers that will drop below the inclining rate. So they won't hit the incline. They'll actually push to conserve water.
And in your revenue requirements, whether with or without the block rate, did you account for that in a less usage in your kind of forecasted revenues, or did you assume the same usage? Okay. So I was playing around with the spreadsheet a little bit, and at 25 and 75, for basically the 6 months we have, I had an average increase of $600 a month of revenue for the monthly customers and about $10,000 per quarter for the quarterly customers. So a total revenue increase, at least for those 6 months, of $45,000. Does that sound like it could be close? Obviously subject to check.
Again, subject to check. And
okay, but then if we doubled those, so it would be about $90,000 of revenue increase. What is your total revenue ask here? After the rate case you guys proposed, what was the annual revenues? Do you know? I think it's around 4 million. I think 4 or 5.
Say that again, what you're looking for.
What's the annual revenue requirement for the end of the rate case? What did you guys request?
You're talking about
It's like 2.3.
the pro forma.
Yes, the pro forma.
Yeah.
Well, we just changed it from,
I don't need the number. I don't really need the number. I just wanted to just say that the 90,000 would be a very small percentage of that. It would be probably 1 or less percentage-wise. Is that? I mean, it's
yes.
okay. That was the point I was trying to make. And so Commissioner Beecher wants it to be revenue neutral, but even if we couldn't do the math for that, it would be a very small increase in revenues. And if we had the response from the customers of using less from both this inclining block rate and from general rate increase, that would be even lower and would be less than the $90,000 change in revenues. Is that fair?
Yes.
Okay, so I guess I'm going to follow through though. If we do want to make it revenue neutral and at the end of the rate case, if the authority approves a total revenue requirement and approves an allocation between rate classes, would it be possible for the authority to order you guys to make this inclining block rate revenue neutral? And you guys would then have to go back basically through all your bills and do it and lower the first block by a little bit to make up for the revenues in the inclining block rate. Is it something you could do upon a final order from the utility, from the authority?
if it was required, yes.
Okay, and that can be, you guys could do that regardless of the kind of change of the variables, whether we change the block, if we change the block cutoffs, if we change the step, the size of the step. A final order in the final decision could say, do this $3 increase or $2 increase step to, and make it, and lower the first block to make it revenue neutral. That is something that could be done.
If it was
Regardless, and
if it
however
was
we play with
required.
those.
Yes, if it was required, we can make the change.
Great. That is my all question. So I beat my half hour by a lot. So thank you very much, and thank you for the spreadsheet. And
Thank you. And nothing further from Deep? Okay. Thank you. I did want to just quickly raise an administrative matter, and I'm not just for I guess for Attorney Bogan for your attention. That late file 44, it's just come to my attention that there's an error on the public website. So it needs to be refiled. I'm not sure whether that was on our end or the company's, but if the company could refile that, just make sure it's on the record.
Is it not? Is it not part of the filing on the website?
It's late file 44. There's an attachment that's linked on the website that's visible, but if you click on it, you get an error. So there's some sort of strange, I don't know. Again, I'm not sure if it's on our end or if there's something wrong with the file, but we just got to fix that. Thank you. So we have reached a all that's left in terms of reserved cross for the rest of this hearing is 30 minutes from Pura staff with respect to rate design, but we have 22 minutes before the 3 o'clock deadline. So Mr. Skarzinski, well, I guess I'll first ask, OCC reserved the right. Does OCC expect to have cross for this panel? Okay. And if I can quickly pull not sure whether, maybe Attorney Bowman, you can answer. Pura staff reserve the right for the last panel, customer service and water quality. Do you know whether you expect to have cross? Okay, and same with OCC. There was a reservation for that last panel. Do you know if you expect to have? Okay, and I teed all that up to put all the pressure on Mr. Skarzinski because now it's entirely up to you. Do you think you can cover your cross in now 21 minutes? Or would you? I should also ask Attorney Bogan whether there might be redirect. Maybe I'll just ask Attorney Bogan, would you prefer, I'm really just trying to make this at the convenience of the company so you wouldn't have to come back for Monday, but would you prefer to just come back on Monday?
So we probably have a little bit of flexibility. I think Mr. Sherwood could probably go as late as 3:15, if that helps Mr. Skarzinski. It does leave one administrative issue though, and it's neither here nor there in as much as the cross-examination, and that is the read-ins. Because we will not have the read-ins. I don't know how you want to handle that. We can treat them as late files and get them in on Monday, which is the close of the record, but.
That is, yeah, that would be acceptable to the authority if you just wanted to do the read-ins written filings before the close of record on Monday.
If that's acceptable to the other parties, that's fine with us.
Is there any objection to that from OCC? Okay. Deep, any objection to the remaining read-ins being filed as written? Okay. Thank you. So let's give it a shot. It's all down to you, Mr. Skarzinski.
Thank you, and good afternoon, panel. Nice to see you again, and we'll just go right down the line here. If you can refer to LFE 1, Schedule E 1.0, please, and just let me know when you're there. Okay. Is it a fair characterization to say that Schedule E 1.0 reflects a revision to the proposed rates from the company's revised 8/11/2025 filing because some of the financials, such as revenue requirement, have changed maybe since the initial hearings, and those changes flow through to the rate exhibits in the e-schedules. Is that an accurate statement?
Yes.
Okay. I'd just like to start at the top of the exhibit and then walk through each general rate category of the exhibit. And in all seriousness, I think the time will be fine because most of my questions are just to understand the exhibit more than anything else. So starting at the top, if you can look at column L and column M on the title, I have a question on column M. They represent percentage changes from the current to proposed rates. So my question is, on column M, did you mean to say the quarterly percentage change on the right column? There's two that say monthly.
Yes, sir.
Okay, thank you. Moving to the rate components, the proposed meter service and fire protection charges do not reflect any rate changes from the company's August 2025 revised schedules filings. Is that correct?
Correct.
Okay. And the consumption charges for residential and commercial customers were reduced from the company's August 2025 proposed filing. Is that correct?
Correct.
Okay. Do you have the percentage change of the reduction in the consumption rates from the company's August filing? If this helps speed it up, I did calculate a decrease of about 3.5% roughly.
Without doing the calculation, I would say it's around there.
Okay, that's fine. Thank you. Can you explain the company's rationale for only reducing the consumption rates in the response to LFE 1, the update?
You want to know why we changed them?
Yes.
It's because when we did all of our adjustments, it lowered our revenue requirement and we had to reduce the rates to meet our ROE.
Thank you. Maybe this follow-up is a little bit more precise. Did the company consider reducing the meter charge rates or any other alternative rate reduction? I'm trying to just understand why you chose the consumption versus the metered service charges. Understanding and appreciate your first answer because the revenue reduction. Just trying to get a mindset in terms of like the rate design, why you made the changes there.
So we kept the flat rate charges the same. They're still under, Connecticut Water's rates. And so we just went with the consumption that is, they can conserve. So we just went with the consumption.
Okay, thank you. Would the company agree that a reduction in the proposed residential meter charge benefits customers whose water consumption is lower than average, more than a reduction in residential consumption rates?
I guess it could affect either way. I mean, the meter charge be set But if they use less water, they're gonna pay less than a proposed rate. It could go either way, I guess.
For a lower than average customer?
Um,
Lower than average usage, excuse me.
no, I guess it wouldn't make the change.
Okay. Would the company agree that the reduction in the residential consumption rates has a greater benefit to customers that have a higher than average water consumption usage?
At the current proposed rates, yes.
Okay, thank you. If you can please refer to LFE 1, Schedule E 3.0, the summary of operating revenues. And just let me know when you're there, please. Okay, thank you. And just looking at, focusing on line 21 in the exhibit, is it fair to say the company's revised LFE 1 Schedule E 3.0 corrects the omission of the public authority revenues to the pro forma year for current and proposed rates from the company's August 2025 revised schedule filing? Thank you.
Yes.
And that the inclusion of the proposed public authority revenues of 110,000, proposed revenues of $110,219 has a positive impact on the other rate classes, meaning the overall proposed revenues required from the other rate classes reduced by the amount attributed to the public authority revenues. Is that correct? Generally speaking.
Yes.
Thank you. If you could turn to line 31, that would be the Rye Hill Fire Protection line,
Kidding me.
please. Okay. There are revenue amounts populated for Rye Hill Fire Protection from 2020 through the 2024 test year, but no revenues were populated in the pro forma current and proposed rates. Is that correct?
Correct.
And I know there was discussion this morning with Mr. Bakari and Attorney Bowman on Rye Hill, but I'm going to ask it in terms of the schedule that I'm looking at and I'm responsible for. Why is that?
Meaning, why don't we have it included in here on
Yes.
those two?
Yes.
We're going to have to research that.
Okay, that's fine. Can we get that as a read-in? That would be fine. Thank you.
Sure, that would be read in K. And is the question why the Rye Hill revenues for fire protection aren't included in that schedule? Was that?
Not included in the pro forma.
Yeah.
For current, and yes, thank you.
So why are pro forma fire protection revenues for Rye Hill not included in that schedule?
Yes.
Okay.
Thank you. Okay, moving on. If you could look at, I'm going to focus in on lines 38 and lines 42, the RAM and the WICA surcharge. First question, the company is currently collecting a WICA surcharge of 10.58%, and the current RAM surcharge is 8.96%. Is that accurate? I think that came up earlier too.
Yes.
Thank you. Are the current WICA and RAM surcharges revenues accounted for and reflected in the total operating revenues for the pro forma and current rates?
No, they're not accounted for in those pro forma, current or proposed.
Okay. If the WICA and RAM revenues are not reflected in the current rates for the total operating revenues, is it correct to say the starting point for the pro forma revenues is understated? I understand why you have them in the exhibit, so let me just qualify that. But just in generally speaking, from the current rates, because you are collecting revenue in WICA and RAM revenues in 2025, correct?
Yes.
So just going to repeat the question, I'm sorry. So generally speaking, is the starting point for the revenues, pro forma pro revenues understated in the total operating revenues for the current pro forma revenues because there's no accounting for those surcharge revenues?
Subject to check, yes, you're correct.
Okay. Thank you. Appreciate it.
Sorry, Mr.
It-
Skarzinski, can I ask a follow-up really quick? For the pro forma year, if the company's requesting a WICA reset here, for pro forma, there wouldn't be WICA revenue. Is that correct?
Yes, there wouldn't be.
Okay. And the RAM revenue is the idea. I would assume the idea is that we're hoping for perfect rate making here. So there is no,
Yes.
we're gonna hit the target directly on the nail on the target on the end of the rate year. So is that why there aren't pro forma revenues in those?
I believe so.
Okay.
Uh,
There is.
Thank you. That kind of going down that line. So that's saving the time here too. So just one follow-up on the WICA, maybe stated a little bit differently. Do the proposed rates and the associated proposed revenues reflect the roll-in of the current WICA revenues into base rates for WICA?
Yes.
Thank you. Okay. If you could please refer to the response to LFE 44, the deep request for the inclining block rates. I just have a couple of questions. Deep covered it very thoroughly, so we're definitely going to make the time. And just let me know when you're there, please. These are all just going to frame it. These are really basic questions just to try to understand what I'm looking at in the exhibit more than anything else. Would you be able to quantify the number of residential customers that, let me back up a little bit. I focused in on just 2024 data. I know you covered several years. Can you, I'll say verify that the number of high usage residential customers at 1% for the monthly, looking at the exhibit, I saw 3, and for 5%, I saw 13. These would be in the top 1%. I don't know if you have that already on the side. If you do, that'll move it along, but just want to get a feel for the number of customers or bills.
That's correct.
Okay, thank you. And for quarterly, for the 1%, approximately, I came up with 25, and for the quarterly 5% threshold, about 125 customers. I don't know if you would agree with that.
That looks to be about correct.
Okay, thank you very much. Bear with me here a second. I just want to try to slash some of the questions because I think it might have been covered. Did the company use any customer demographic data in drafting the response, or was it really just a result of pulling the bills and isolating those top end users?
Just the usage from the bills.
Okay. Based on your experience in the company and within the industry, do you believe that the first tier block thresholds accommodate a typical family of 4 with average usage? Would you have any general knowledge of what that might be?
Typical family of 4 for quarterly, the block rate at 30. Let's stay with 100 cubic feet. Would be about 30 for a quarter. It'd be anywhere between there and under.
Okay.
It really only fluctuates during the summer season or depending upon if you irrigate or fill your swimming pools or anything like that.
Okay. This is my last question, and thank you for accommodating the time. I think we'll wrap it up, but general question. Just listening to your conversation with Deep regarding this LFE. In your opinion, would you feel comfortable with what you propose, or there's no right or wrong answer? So I just kind of want to hear your thoughts. I know a couple of times I heard you say about additional analysis. And so, at the end of the day, we're going to be reviewing everything, of course. But do you think, in your opinion, with what you propose, was it to give sort of a thumbnail in an inclining block rate environment? Because we raised that here versus, in your proposal. Or would it require additional analysis to really dial in? I know you had some good conversation with Mr. Ennis in terms of different thresholds, and he offered up different alternatives. Just in generally speaking, what's your take with what you filed versus really maybe an alternate with additional analysis looking at all bills? It could vary. Is that fair? Sorry, it's a jumbled way to get to. Could it vary, and what's your take on the analysis? That's
No, I
really-
mean, it's fair. When we actually ran this, we were pretty surprised at some of these, what the water rate would be, for some of these customers with that inclining rate set at 55%.
Okay.
So if things were adjusted or that was adjusted, the incline was adjusted downward somewhat, then they wouldn't be this high for some of these people. It was quite the shock to see what an inclining rate would be to some of the residential customers. And, I understand the need for the inclining rate for conservation and such. However, do we go that steep? At what point do you want to be that drastic on and quote unquote penalizing someone for using some extra water during the summer to irrigate their lawn or whatever it would be? The declining rate on our previous rate schedule was for commercial. It wasn't for residential. So you were rewarding a commercial for using more water. Now you're trying to penalize a residential for using more water, as opposed to bad companies for using more water. Or do we follow, again, Connecticut Water commercial rate is somewhere else? So do you have a commercial rate that's set differently than a residential rate? And then you have maybe an inclining residential rate. Again, I'm not, it all depends on how the authority wants to proceed with rate.
That's all I have. Thank you very much. Appreciate it. Thank you, Chairman.
Thank you. Thank you very much, Mr. Skarzinski. You're the MVP of this hearing for getting through that in time. Commissioner Beecher has one question, or has questions for this panel.
Well, I think I can be brief. So as part of your analysis, did you also consider, it came up briefly, so I just want to follow up, the allocation between the fixed and variable charges. If my back of the envelope math is working for me, I saw about 28% maybe fixed charge revenues from a typical bill, or just let's, for illustrative purposes, just saying that might be about right.
That would be, yeah.
In that ballpark, okay. So as part of your analysis, another way to enhance price signals, the issue raised by Deep is to actually enhance the variable charge, bring down that fixed charge, which also could have some implications for equity and affordability for lower income households. Have you given that some consideration as well?
Not until it was discussed here, no.
Okay, so that might just, for future, analysis is something you can also think about. There's, rate design is a multifaceted area, and we appreciate the challenge of it, especially in the absence of a more detailed study and understanding of the elasticities, and it's always an experiment, so we appreciate that. Thank you so much.
Okay, I think that Again, I'll ask Attorney Bogan, you've got no redirect? Sure.
Mr. Chairman, I do have one question.
Sure, go right ahead.
Mr. Sherwood, do you recall the questions from Mr. Zablowski regarding the company's lease at its old facility and the lease at the new facility?
Yes,
And there was a disparity in the numbers between what was required under the old lease and what's required under the new lease. Is that fair?
yes.
Is the space at the new location similar to the space at the old location?
No, they're not.
And how's it different?
The old space, we had X amount of square feet of office space. The new building has approximately the same amount of square feet of office space, but had additional, they call warehouse space. And that warehouse space was done so that we would be able to house some of our equipment, material, and all of our vehicles inside, away from the elements, away from vandalism and everything else like that. So currently, in a stipulation with the town for having our office there, is that none of our vehicles are parked outside. They're all kept inside the warehouse or inside the office garage space.
And reflecting on the chairman's questions earlier, as well as Commissioner Beecher's with regard to cost justification, do you feel that those additional attributes justify the additional expense?
Yes.
I have nothing further.
All right, thank you. That brings us to the end of this hearing. I will just, as a last administrative matter, just quickly reiterate what I said this morning with respect to the supplements and written read-ins that come in. If any party feels the need to object, we would consider that certainly. And anything that comes in after the close of record tomorrow afternoon, the authority, again, would be subject to objection from any party, and the authority would have to kind of consider what weight to afford it, given that it would come in after the close of record. So if there is nothing else from anyone, then thanks especially again to Rich Skarzinski for getting us here in time. And thanks again to the panel. And I think all the commissioners appreciate everybody's candor and participation in this hearing. Thank you.
Thank you. Yes, Monday's canceled.